All right. Hello, everybody. Welcome to the official Palantir Q2 2025 earnings stream. Very, very excited to be with everybody today. We are about to get started. We have a bunch of guests that will be coming on to the show as we plan out and see what we've got going on for Palantir Q2 earnings. We will get the numbers in about 30 minutes, maybe 35 minutes, 4:05. And once we get the numbers, we'll be able to break down the numbers, the shareholder letter, all the results. And for the next 25 minutes, we're going to be doing a preview of what we get before we get into the actual results themselves. Now, before we get started, I do this pretty much every earnings, and I think we will keep the trend going. Just want to say, this has been one of the best communities that I've been a part of my entire life. It is truly a community effort for us to even be on this journey together. Palantir is a retail story. Through and through, it is a retail story. It is a unicorn retail story. The analysts are now chasing the stock as the stock goes higher because they missed it when we understood it many, many years ago. And as a result of that, whatever happens to the stock today, whether it goes up or down, it's up 550% over the next year or over the past year. Anything is possible, as we've seen. 3 earnings ago, Palantir was up 20, 30% after hours. Last earnings, it was down 10%. So the stock price largely to me is irrelevant. Anything can happen to the stock. The company is what matters. And given the type of growth we expect from them, given the type of standard that we hold them to, and how they've been executing far beyond all of our expectations, today is another day to see if they can continue to execute. And as a result, I just want to say it's been an incredible journey with everyone celebrating what has happened with Palantir, because it is an American story, and it's a story that globally across the world, even if you're not from America, you've been able to take part of Palantir's mission, which is protecting the West. And you've been heavily rewarded for that as a result of joining that story. Having said that, let's get into the analysis. Thank you, everybody, for being here. I'll have a bunch of people joining me, but first off, let's get started with none other than the person who bought at DPO, and he's been holding ever since, ladies and gentlemen, Mr. Matt Money. Matt, what's up?
Good, man. How are you feeling?
I'm doing good. We've been through this. You've been through. I bought in 2021. You bought in 2020, so you were earlier than me. You've been through this for the past almost 5 years now. What are just your raw opinions and anxiety, nervousness? What are you feeling going into Q2 earnings?
Well, for me, I'm just continuing to hope that, or not continuing to hope, but anticipating that the continued success of the company shines through. I mean, I look at this as a check-in for where I believe this company will eventually be $1 trillion business, if not more, in the long term. So, to me, we're sitting at 350 to $400 billion market cap. It's extended for where we are today. But what I want to continue to see is that small check-in terms of progress for where we're going to be in the next 10, 20, 30 years. And to me, that always just shows what continued innovations the company looking at, what continued partnerships are they building on, is the net dollar retention, that underlying performance continued to trend in the right direction. So whether or not for me, growth comes in at the 40%, 45%, that doesn't really matter to me. What matters to me is the great partnerships that are being built, and in the underlying business itself is healthy. The margins themselves are kind of healthy in the respect of like the free cash flow margins, and trying to really check, right? Because in the long term, this is the company. It doesn't matter if it makes $1 billion this quarter or if it waits until next quarter to get to $1 billion in revenue. uh, it'll get there at some point. What I'm more curious about is where's the free cash flow margin or ops cash margin really going to end up? That's what's going to really drive the underlying value in the long term. Is it, i- understanding if it's going to be a 30% free cash flow margin or 45% free cash flow margin when you're making 10, $15 billion in revenue is really going to be the determining factor as to whether or not this is a 500, 600, or even $700 billion business. So that's the stuff I'm looking at, and to me it's been trending in the right direction. But obviously we all know, just looking at the actual net income itself on a GAAP basis, the company's valuation is currently stretched. So, I think anything to kind of help reduce that stretch would be a step in the right direction. But overall, I look at the great partnerships that are coming through, the $10 billion partnership that we think is going to be coming through with the Army that was kind of just signed the other day, and the continued operations and foundational software that we see being built across companies across America that or continue to partner with Palantir, companies that have remained stagnant. We're talking about companies that have been in business for 50 years to over a century, and have just been sitting there, sitting on their laurels, if you don't mind me saying that, and need to be reinvigorated, need to be brought into the 21st century, into the modern, uh, basically the modern way of doing things. And I think,
Yeah.
unfortunately, because you have so many companies that have had so many different old archaic disparate data systems, going from the 70s, the 80s, the 90s, they could use something like Palantir to really refresh that and start from the ground up. And I really hope that this is the company that restarts it all. I think Microsoft did a really good job of that in the 90s and early 2000s, and I think it's now Palantir's job to take that from the 2020s to the 2030s.
I agree. And one of the most important things that you said is that you are not worried about the share price because it's a different type of earnings on Palantir. Like when this stock was stuck at $7 for almost 2 years, all of us really cared about the share price. We still care about the share price, but after 2 years of purgatory, it would be nice to see the share price move. And it did. And then every consecutive quarter after that, we kind of continued to see appreciation. So I agree with you. I think a lot of bulls would agree with you that obviously the valuation's up there, the stock has become expensive. But now the mystery around Palantir has kind of been to some extent resolved. People understand what they do. So it's a question of, can they put up the growth? The market has pulled forward almost 10 years of growth in the share price today because they're expecting them to beat and raise, and really become that company we all think they can become. And so this earnings, regardless of what happens to the stock price up or down, I think we all care about the actual progress of the business. And if the business continues to execute and maybe blow away our expectations, we might see some strong momentum for Palantir. Amir, hello.
Oh, what's up,
Oh
buddy?
wait, you put me on? Wasn't ready.
You're on. You're
I was like picking
like,
my nose.
like
and
young
setting up
Jeezy would
YouTube.
put you on, man.
Yo, what up, everyone? What up? What up? What up? Oh my god, it's a big one, huh? 1 billion or not?
Yeah, so I put a poll in the chat, revenue expectations. The street wants 939. I put 940, 950, 970, 1 billion. Of course, 45% of you voted for $1 billion. So,
Wait,
Amir,
only 45 voted for 1 billion?
45% of the vote voted for $1 billion of revenue.
Damn, got some bears in the chat, huh?
Let's start off with that question. Amir, what do you think revenue comes in for Palantir?
What did I say on Saturday? Like 980?
Yeah.
I cleaned my Excel sheet, so I'm ready to input the results. I don't actually have my actual prediction, but 980, yeah, a bit above the street, 40 mil, give or take. But it's always so difficult with Palantir because we had a lot of deal activity. I'm sure you've shown Arnie's deal breakdown, but the revenue recognition is just so unpredictable. Like they might have so many contracts signed, so many deals, like a lot of hype and fire. Karp said it like a few weeks ago, like, yeah, this has been the most hectic time ever at Palantir. But like, it doesn't mean that the revenue recognition actually comes in the quarter. So it's kind of, difficult to predict. But yeah, 980 to 1 billion, sure. I mean, I'd give it above 45% of 1 billion, personally.
So you think there's almost a 50% chance of getting to $1 billion. Matt, how do you think revenue plays out? Do you think we beat 940 and do we get as close to $1 billion as some people think?
It's interesting. So to give people some context, so they guided for 936, I think at the low end, if I remember correctly. So that gets into about a 38% year-over-year growth. To give people some context, is something I've always referred to. So even if they stay flat from last quarter, so 0 quarter-over-quarter growth at 883, that's still 30% year-over-year. From the second quarter of last year, which is still phenomenal even if you stay flat. But guiding for the 38% that they have, it gets them to 936. I don't know. I want to say they hit 40. Maybe it's an optimism. And so in that respect, you have to kind of get to 947 million in that respect. But as always, the past few quarters, I've been slightly under, if not, I guess, severely under predicting for a lot of these things. So I don't know. I'll stick with the 947 for now to kind of chin that 40% year-over-year bar. We'll see. We will see.
I think, weren't you dead on for Q1 though? I know you were a bit low for Q4, but Q1, I think you were like on the money. If I
It was like
recall
1
correctly.
million off or something.
Yeah, you did
yeah,
a
I
good
couldn't
job in
remember.
Q1. But yeah, with Palantir, you know, with the revenue recognition, similarly with cash flows, like it is just, you know, so seasonal. You never know. So, but you know, gotta believe in Karp. You know, the commentary has been very, very bullish throughout Q2. The deal activity has been very, very bullish. So, you know, if I had to like be over under, I would say, yeah, my personal guess is 1 billion, but who knows? You know, as we always talk about, Arnie makes this point all the time. It's not that important, like 20 million up or down, or like whatever. Like it is the trajectory, it is the commentary about what's coming for the future. Because the stock price today, it's not priced for this quarter. Like, dude, we are pricing in some magnificent future ahead, like very, very amazingly optimistic future ahead. So as long as that stays the same, like who cares, like 10, 20, 30 million up or down for one quarter, like it's not too important. But still, you know, it's fun to speculate. That's why people come here.
Yeah, no, I agree. And again, like it's just, this is one of those quarters where could I see it going to 180 after a massive quarter? Sure. Could I see it going to 140? Yeah. Like I just, at these levels, when it comes to the multiples trading at, it's largely irrelevant between 10 to 15 bucks. Obviously, all of us care because we have shares and that affects our personal portfolios. But the market, in a nutshell, is saying that Palantir will be, as Amir said, one of the biggest companies in the world and uniquely be able to grow at a compounded annual growth rate with free cash flow margins and operating margins that are better than every other software company basically that has ever been on the planet, you know, and that is what the multiple is implying. And all of us, I think, believed that when we were buying years ago, but now it's happening. And these are the quarters where if Palantir can put up the numbers, and maybe it doesn't have to happen, you know, even this year, those types of NVIDIA quarters that we're searching for, maybe it's 2026, 2027, but the framework for that revenue reacceleration along with EPS growth, I think is being put into place. And we're seeing it in the deal activity as well.
I mean, look, we got last quarter, 24% of the growth was just from existing clients. Now we have more clients. We know that the scalability is insane. If we can reach like net dollar retention of even like, let's be super bullish, like 128, that's 28% of growth just from existing clients. Then you only need that 12% from new clients. And given the deal activity being so bullish, I mean, it's not out of the question, as Matt said, like 40%, I think is kind of like the base case for me, 40%. But, you know, that scalability and the net dollar retention really carries growth forward. That's what makes me, you know, kind of optimistic about 1 billion being potential, you know, because you don't need too much from, you know, new clients because the existing ones are already scaling so well.
Agreed. 100% agreed. Here is a clip from Q1 earnings on Karp speaking about what Palantir's moat is. And I think this will set us up to get into Q2 earnings today.
You know, we're running this business for you, with you as owners, which means, you know, it's like there's going to be maybe lumpiness, but we predict we're going to do very, very well. Basically, where you have pressure testing, you can assume AIP, AI Foundry, Ontology, Apollo, and the Palantir culture itself. I mean, we are a warrior culture. Like that's why our whole culture is built around putting the exact right team and the exact right product at the final mile. And so where you have environments that are crucial and under pressure, you can expect, and where meritocracy happens, it's like, we need meritocracy. How do you get meritocracy? Well, there's lots of ways to get meritocracy. One way is because you're scared. And then you buy the best product, you install the best product, and then the part that's anti or correlated different than people think is you also get the best ethics, the best execution, and that, of course, and then you can ask a simple question. Why is this a moat? Okay, well, I can tell you why it's a moat, because heretofore, no one has gotten into these environments at scale under any circumstance. And if they did get in, they got in with services. So now we have a single purposed, highly formed stack of software that is exactly right for this moment with a culture that's exactly right to implement it, which a culture that can teach people how to do this, that is now charismatic for some, it's anti-charismatic for others. And that de facto, it's the compounding rate of return on that stack. And to Shyam's opinion, the opinionation we have about how to do this, it's essentially allows you to express your tribal knowledge of your enterprise in a way you could never do it before on the terms of your enterprise with unit economics that are heretofore impossible to do. And that's what's happening in this country and really in 90% of our market, which explains like the 49% growth and the rule of 83, despite our what would be viewed on the outside as large ineptitudes in sales and go to market and how do we interact with people and our opinionation, both on the outside, on the inside, and with the frontline customer, which is like, we're not agnostic to using our software as shelfware. We are not in the shelfware business. There's another reason why pressure in the government really helps us. We've never done shelfware. We don't do shelfware. We don't think our personality can afford shelfware.
I mean, you kind of just want to run through a wall after you hear something like that. Amir, what are your thoughts on kind of the energy that Karp could bring to this call as well?
Dude, I just want to comment. Someone wrote in the chat, I have that same t-shirt. That joke never gets old for some reason. It always gets me, dude. No, yeah. I mean, we talked about it a lot. You know, this new wave of investing in people seems to have really been working well lately, as we talked about. You know, Vlad, we have Karp, we have Elon, a bunch of people. Karp is truly unique. He, like, I don't even know how to, like, I, as someone that doesn't really appreciate all the, you know, poetry and, you know, all the philosophy stuff, like, it kind of goes above my head. But still, when he talks, there's no like punches held back. Like he gives it to you straight. I really love that as an investor. And you know, his track record of being correct is like flawless for like over a decade. Like pretty much everything he has been predicting for the future has come to pass, more or less. You know, everything from geopolitics to stuff about his own business. So when he talks, you better listen, and you know what kind of guy he is, and he will tell you straight, like, people don't want to deal with me, they deal with me because we are the best. Like, gives it to you straight, and you kind of have to respect that. And it always gets me so hyped and fired up. And it's so funny that no one on Wall Street really gets it. You know, I remember when he dropped the F-bomb for the first time, the market opened the next day. Cathie Wood dumped all her shares in Palantir because he said that the F-bomb is speculated. She didn't admit to that. She was like, nah, they're probably losing government contracts, you know, completely made up. But yeah, I mean, he's what's not bipolar? What's the word I'm looking for?
Little ADHD. His mind is constantly running. You know, he has ideas that he wants to communicate. I mean, like, what I mean, he brings out emotion in you. For some people like us, he brings out, like, you know, some very positive emotions. For some people, they really can't stand polarizing.
Yeah, bipolar. Polarizing is the word. Thank you. So yeah,
which is important in the stock market. You need people to have an opinion on your stock, and if you're polarizing, and a lot of people love you, a lot of people hate you, the people that love you end up buying the stock. Matt, if you were an analyst on the call, and I would love the chat to answer this as well, what's the one question you would ask to Palantir?
I would ask specifically, what industries are they focusing on deepening next? And will they be releasing Healthcare 360, which I think is a platform that they've been working on, kind of like how they released Warp Speed for manufacturing? How are they going to be kind of, is Healthcare 360 going to be an app that they kind of just label as, you know, they say not the shelfware business. I agree with them. Like, they don't make shelfware, but if they were to have a consistent application business across all healthcare, you know, professionals that they and companies and systems that they work with, it's like, you know, will they kind of be utilizing that sort of way of working? I mean, obviously they now control a vast majority of the hospital beds, not the majority of, but a large portion of the hospital beds within the United States, and they're starting to do so across the globe as well, in places like the UK, as we've seen with the NHS deal that's happened over the past few years. So are they going to release that as a separate kind of deal, kind of like what they did with Warp Speed with manufacturing? And what else are they focusing on? So manufacturing, healthcare. I mean, uh, there's so many other things that they've potentially put into. And then another one that I would actually be curious about as well is they have done some more investing recently in some startups, and I'd be curious. I was a big proponent actually of the SPACs. Maybe they should not necessarily have gotten um, as deep into it within a singular year as they did. But to me, I think that they should definitely section off a portion of their cash flow, as I think will end up between 1.3 and 1.4 billion dollars of ops cash on a trailing 12-month basis after this quarter. A portion of that should be dedicated into investing into these small startups to be able to infiltrate. And I think a really good example of that was Gecko Robotics. The whole operating system for Gecko Robotics is actually built off of Palantir's Foundry. And it's actually something I've looked at investing in on a private side. But different story for a different day. But I think that that's a huge avenue that I think unfortunately left a bad taste in people's mouths back in 2021, 2022. But I think is a huge opportunity going forward as a venture arm that Palantir should look into. So, what other industries and what venture arms and is there any things that they're going to be releasing, kind of like Warp Speed?
Dude, imagine the reason no one got, that Figma allocation is because Palantir bought up all the IPO shares. Dude. No, I mean, I agree. They, as you've been talking about, Matt, I mean, they have been dominating, industry by industry, as you mentioned, healthcare. Now, the recent focus has been manufacturing. We know that logistics has been a big one. And just, how many different industries they cover, because even back in like early 2021 when they started to doing some ads on YouTube, like 30-second clips, they had this one called Palantir Redacted that showed like how many industries they operate in, and that list was like 30-40 industries already back then. Imagine now, like the more customers they get, like the flywheel just keeps going because the more expertise they get. So that just keeps compounding on itself. For me personally, I don't know about question, but I would love to start to see some more segmented results. Like, we don't really know what Apollo is doing. We don't really know what Foundry AIP is doing. We don't know what the Warp Speed is doing. I know there are two reasons. Either it's going really poorly, so you don't want to show it, or it's going too good, and that's the reason you don't want to show it. So, as an analyst at heart, I really want to dig deeper into segmented results. We're probably not going to be getting it for a long time. I just noticed, did we hit a new all-time high today?
We did. We hit 160-130. Those new all-time highs. Palantir on earnings tends to run up going into it. And the last time we ran up into earnings and fell was last quarter, but the quarter that happened again was May 2024. So in the quarters in between, which I think is about 3 quarters, you didn't get the earnings dump after the pre-earnings pump. You just had another pump. So it's kind of 50-50. Either this pre-earnings pump is going to lead to some more momentum if the earnings are great, or, it ends up falling.
Can you zoom out the daily chart? It seems like the volumes today are very low for being Palantir earnings. I mean, this is one of the most hyped stocks,
Yeah, you're not wrong. Volume is 62 million shares.
The volume is so low for being Palantir. I mean, especially like new all-time highs, new top 20 company, biggest company in the world, potential $10 billion deal. Like, a lot of stuff is happening. Why is the volume so low? And another question, I don't know if we have time, but do you guys know the short interest going into this earnings? Because we always talk about it. People cry on X every day, like, this is the biggest bubble I have ever seen. Meanwhile, short interest is like 2%, like nothing. Like
2.49%.
Yeah, like, why is no one shorting the biggest and most obvious bubble in the world? Like, why is no one shorting this stock? So yeah, always interesting to see the dynamic. Like, people aren't willing to put their money where the mouth is when it comes to Palantir anymore. We've been burned so many times. So yeah, that's also interesting.
All right, folks, here we go. We are here today across the entire world. Thank you all for being here. It is a community effort. No matter where you are watching from, we have an interest in this company. It has kept retail excited for the past 5 years. It continues to excite not only retail, but the entire world. And today will be another day to see if Palantir can continue their growth story and continue to take us on the adventure of a lifetime. Thank you, everybody, for being here. It is Monday, August 4th, Palantir Q2 2025 earnings. The stock market is now closed. And now we wait. And now we wait. Earnings expectations are 14 cents a share and 939 million in revenue. So within likely the next 2 minutes, we should be getting those answers. And then we're going to see what happens to the stock. Go ahead, Amir, you want to say something?
No, I was going to say F5, F5.
Yeah, we also will be getting a shareholder letter. I will read the letter after we go through some of the numbers. The letters tend to be long, so please bear with me if I'm taking some time reading the letter. But I think as shareholders, the letter is obviously very important. So once we get the letter, I'll be reading that as well. 161.48. You're getting a little bit of a green candle after hours. Again, the numbers should be up probably in a minute. And then we're going to get a better understanding. That is all-time highs already at 161.92.
Kramer has been pretty bullish Palantir lately. That's kind of worrisome.
Kramer has been memishly bullish on Palantir, so I don't take it seriously. But we're gonna see. Oh, there he is, just in time. Arnaldo V.
Oh, new
like
headgear. Look at that.
New merch. Some
I stole it.
Some exclusive Palantir merch. Okay, all right.
I like that.
Arnie, you are just in time. We should be getting earnings any second. And we deeply will appreciate your analysis when we get these earnings as well. By the way, guys, we're probably not going to be covering a lot of companies. So if you're interested in other companies, I'll talk about it tomorrow on the Market Open. But this one's going to be pretty dedicated to Palantir since there's a lot to break down. So that's going to be the majority of what we're looking for on the stream today. Arnie, general, just like thoughts going into this print.
Look, we discussed deeply at Palantir Weekly what we are expecting, and I think it's a baseline that we are expecting good things to happen. But you know what? I did the usual recap that I typically do for the deal summary, the deal flow activity that happened during the quarter, and some thoughts popped to my mind. Like, have you realized, like, our attention was on the $10 billion up to $10 billion deal that was just signed last week. But have you realized how many things happened during the quarter?
Yeah.
Because personally, by making this compilation of deals, I admit I already forgot that during Q2, we got Maven for $800 million for 4 years. Then we had an upgrade of $200 million for the Space C2 data platform solution. We had many, many deals going on. We have the expansion of NATO Maven, like a Maven for NATO. Like, we are talking about big stuff that even if they not make the numbers in Q2, certainly they will make in Q3. So we'll be incorporated in the guidance. So I confess, by doing this exercise that I typically do, I became much more confident on the unexpected things that could surprise many people. In terms of deal size, I think personally almost nobody expect Palantir to be doing this well.
Agreed.
What's your thought when you saw that list?
Wait.
795 million that you posted. I mean, you're right.
Shareholder letter is out.
Shareholder. Okay, I don't have the numbers yet, guys. I'm still waiting on that. I don't see the numbers on my side.
You'll be surprised by the
You got the numbers?
Can you link?
Hold on. Let me go to the exact website itself. I don't see it at here.
Usually the shareholder letter has some numbers, right?
Oh,
yeah,
it
the shareholder
does.
letter has some letters, yeah, or some numbers.
Okay.
What's this discrimination?
Can we link?
Yeah, I just
Oh
went to
my
the-
goodness, they did $1 billion. They did $1 billion.
Wow.
Hold on.
That's
Hold
impressive.
on. They did $1 billion. They did Q2. They did
Oh my God,
$1
we got the B.
billion.
Damn.
Palantir, ladies and gentlemen, for their first time in history, has
That's
done
insane.
$1 billion in revenue. Wow.
55% were too bearish, guys. Shame on you.
Wait, they grew 55%? That's the exact number? Is that correct?
48.
40. Wow. Oh my.
That's insane.
Oh my. Okay, so I don't have the exact numbers yet, guys. I can go through reading the letter, or I can wait for the numbers. The numbers should be out very soon. Wow, they did $1 billion.
6.7 quarter over quarter.
48% year on year.
They did $1 billion. We were all talking about it on Palantir Weekly that they could do it. This is what you get with the ontology, folks. They got $1 billion. All right, I'm just gonna go read through the letter. It might take me some time.
Yo, the U.S. commercial growth. That's the next part. All right, read through the letter. Sorry, don't let me distract you.
Can someone give me
no, I
a
got the
link?
numbers, I got the
I'm
numbers. All right,
crying.
here you go. Here are the numbers, folks. Palantir has done $1 billion in 90 days on revenue, and they beat by 14% on EPS, 16 cents versus 14 cents expected. I haven't even checked the stock. The stock is up 7%, 165. $1 billion for Palantir. I think that deserves a little bit of a bell ring. $1 billion. Congrats, everybody.
Is it a Palantir bell?
All right. I will read the letter. Give me a good 10 minutes. Let me get through this letter. I'm sure there's a lot of stuff we have to look at. Wow. I'm a little speechless, to be honest. $1 billion in revenue. Here we go. All right. August 4th, 2025, Palantir's CEO, Alex Karp. All the value in the market is going to go to chips and what we call ontology, Karp said on June 6, 2024. This is still only the beginning of something much larger and we believe even more significant. Our overall business generated more than $1 billion in revenue for the second quarter of the year, a stunning 48% increase over the same period the year before as we reach an annual run rate of more than $4 billion. The growth rate of our business has accelerated radically after years of investment on our part and derision by some. The skeptics are admittedly fewer now, having been defanged and bent into a kind of submission. Yet we see no reason to pause, to relent here. It has been a steep and upward climb, an ascent that is a reflection of the remarkable confluence of the arrival of language models, the chips necessary to power them, and our software infrastructure, one that allows organizations to tether the power of AI to objects and relationships in the real world. And our U.S. commercial business, which, again, top-line revenue with 48%, the emerging core of Palantir and the seed of what an entire industry will become, perhaps the world's most dominant in the years to come, nearly doubled in 12 months, generating $306 million in revenue last quarter, representing a 93% increase from $159 million the year before. For a startup, even one only 1,000th of our size, this growth rate would be striking, the talk of the town. For a business of our scale, however, it is, we continue to believe, nearly without precedent or comparison. The software industry for years was judged by what many called the rule of 40, the view that the sum of the rate of the growth in the revenue generated by a compelling software firm plus its profit margin should be greater than 40%. Ours is now 94%. Palantir stock, $168 after hours. With continued execution and a focus on what matters and a near complete disinterest in what does not, we believe that Palantir will become the dominant software company of the future, and the market is now waking up to this reality. The reasons for our increasingly precipitous rise are many, but principal among them is our willingness to foster an unapologetically specific culture within this artist colony of a company to allow for plenty of friction and disagreement across a range of domains, yet remain unwaveringly committed to a set of values and approach to the building. It is this culture that gave rise to the ontology, forward deployed engineers, Foundry, and Maven Smart System, all of which have already changed the course of human history. Terms and titles that we casually coined decades ago are now widespread. Some have been adopted by companies which seek to mimic our impact and ascent. Similarly, in the US, the most consequential country in the West, it is the culture that enables companies like ours to come into existence and excel. It must be protected. The United States is not and should not be permitted to become a soft compromise and amalgam of global values and tastes. A reticence or perhaps incapacity to pronounce and to prefer beyond the shallow and ritualistic shaming of others in the public sphere that masquerades as thought has had costs. A further statement of the causes and consequences of this reticence is set forth in The Technological Republic, which is Alex Karp's latest book. In short, however, a tolerance of everything, a shallow embrace of all views and perspectives are equally valid, often and unfortunately devolves into the belief of nothing. In Abolition of Man, published in 1943, C.S. Lewis warned us of men without chests, those who were never permitted an opportunity to develop an interior life of sentiment and emotion, of some devotion, indeed an attachment to the inexplicable and perhaps indefensible. For every one pupil who needs to be guarded for a weak excess of sensibility, Lewis wrote, there are those who need to be awakened from the slumber of cold vulgarity. Such men without chests promise to shepherd us forward, lack much substance and content, even a flicker of animating worldview or belief structure other than their own self-preservation and advancement. They are little more than administrative caretakers who have been taught to fear belief and sentiment. Some claim to be part of a struggle, but their identity is often merely oppositional. In the end, they are hollow and stand at a lonely distance from the world. Sincerely, Alex Karp, CEO and co-founder of Palantir. Well, boys, we did $1 billion. We did $1 billion. Arnie, give me your raw reaction. What are you thinking?
Again, we were optimistic the degree with which the company can surprise even us. We have been so obsessive with this company for 3 years or more. It's insane. Look, remember we were talking about the insanity of having the rule of 40 already at 80%, meaning that while you were growing 40% with 40% margin, that is already insane, especially if you are able to increase them. If from high, you go to insanely high, more than doubling the rule of 40, reaching 94 now, it means that they were able to grow 48% with 46% free cash flow margin. That's
and adjusted operating margins are up 2% quarter over quarter from 44 to 46. So still we are seeing the expansion of margins in this business.
It's insane. It means that AI is not only a word, it's not propaganda as Snowflake, ServiceNow. We are AI, but at the end of the day, they just hire new people to sell AI. Here, there is AI that works and is proving it.
And they raised their guidance to 45% for the fiscal year. This is the only software company on planet Earth that is growing above 40% in the age of AI, or at least in the sector of AI. There's no other software companies doing it. Palantir is doing it. Amir, give me your raw thoughts on some of these numbers.
Dude, there are some, the deck is out and there are some insane things in here. 222% US commercial total contract value year over year. That one is absolutely insane. But look at this one. If we exclude SPACs and just look at organic growth, grew almost 50%, which is just insane. Government revenue grew 49%, commercial 47%. And I've always been bullish on the government revenue, but almost like 50% government revenue growth in US government, 53%. Like, dude, these numbers are insane. It's gonna take a while to digest, but the biggest thing still, like the growth, fantastic. But what makes Palantir special is that they are expanding their margins. They're increasing the margins while they are accelerating the growth, and that's what makes Palantir deserve its rich valuation. It's not like a growth at all costs. Like, they are growing insanely fast and the margins are expanding continuously. That's like the most magical thing. Like, when you can find a company like this, like, you better hold on for dear life. Like, this is very, very rare that you can have, like, I don't even know what was the rule of 40. I skipped past that, like
94. Yeah.
94, like, it's just completely insanity the way that they can scale both revenues and margins to this degree. And yeah, the big one, of course, let's see.
Customer count reaccelerated 850.
Exactly, yeah. That was what I'm gonna say.
This is pretty incredible. Matt, let me get your raw thoughts, and then we'll listen to CNBC announce the results as well.
I'm just upset you guys had the presentation. I can't find it on my.
Let me send it to you. I'll
thing
send it to you. I'll send in the private chat. You got it.
Thank you. But yeah, overall, surprised the fact that they've been able to continue. The thing that goes back to what Amir was saying before we got the results is like, if we were able to understand the cohorts and the breakdowns as to seeing where the growth is really coming from, is it strictly Foundry? Is it Apollo? Is it warp speed? Is it, where exactly are we seeing this? Because it'll allow us as people that are truly trying to dive into the numbers and digest these things to try to understand, and maybe we could have seen this coming had we been able to do that. And one of the things I always try to understand as well is, like, you hear about the meetings with all these international governments, and what you don't necessarily understand is what revenue streams are coming from that. Or is it one of those things where the contract once again is offered at $1, and the hope is that you are able to retain that client and grow them, hand over fist. And that's part of the large net dollar retention that we're seeing start to regrow and accelerate as we've gone from over the past, say, 24 months to now, almost going back down to 100%, which is great, right? Everybody renewing their contracts and nobody's leaving, to now growing way past 120%, meaning everybody's upping their contracts by over 20% per annum. So very curious. I mean, but it just goes back to, if we're able to get that granularity, it would really help us. But also understand how much more intense that makes an earnings for these guys. And at the end of the day, that just adds teams of people that need to be able to kind of manipulate and organize that data just for this purpose. And at the end of the day, they just need to deliver and do the software thing that they normally are doing, right? So it's kind of puts you in a rock and a hard place between, hey, can we get this data, and hey, focus on these things, when in reality they should just focus on delivering like they have been.
Yeah, and I think the most important thing about this is that Palantir's valuation is aggressive. All of us know that. So all of us shareholders and the general public that may not own the stock or really invest in the company, but they've just seen Palantir and seen its meteoric rise, are now having one question, which is, can you actually prove that you guys are built for this moment? Not for the moment 5 years ago, not for the moment 20 years ago, not for the moment 10 years from now, this moment right now, because the market's giving you the premium. Can you guys live up to it? And I think undoubtedly what we are seeing in this quarter is Palantir saying we are ready for this moment, and this moment is ours.
Can you share my screen just quickly?
Let's just hear this real quick, Amir, then I got you.
No sound. No sound. Or am I deaf?
Oops, sorry. Need some Foundry on my stream. I am wow, did this in front of 14,000 people. That's
I was feeling sad.
Oh my gosh, that's great. That's great. Well, here we go. Sorry. I'm back. We're back.
$1 billion. Also a big beat. First time you've seen quarterly revenue that has hit $1 billion. U.S. revenue, that's up 68% year over year. U.S. commercial, this is a key metric, growing 93% year over year, 20% quarter over quarter to $306 million. U.S. government was up 53% year over year, 14% consecutively. 426 million was the number there. Palantir sees Q3 revenue of 1.083 billion to 1.087 billion. That is well above expectations. Full year revenue also hiked to 4.14 billion to 4.15 billion. That was the range there. That is way above prior guidance. Also raising adjusted operating income, free cash flow guidance for the year. CEO and co-founder Alex Karp saying, quote, "Just tell the haters, read them and weep." Karp telling me,
wow. That is Alex Karp's quote to CNBC, baby. Just tell the haters, read him and weep. You've got to love it. We are alive to experience this in this moment. You've got to love it.
with some notable exceptions of some big international clients that quote, "This is an America story. It's everywhere in America. We're going faster than we are even able to grow. Like, we're going to have to start turning away people. We are now very focused on people who are partners that are willing to learn from us and then ramping them up very quickly." Palantir posting a rule of 40 score of, get this, 94% for Q2. That's hot. That's higher's better. This is basically an unheard of metric. Karp telling me the plan is to grow revenue 10x over the next 5 years, and to do so while decreasing the number of people that are working at Palantir from 4,100 down to 3,600, though they are not planning to reduce that headcount with any kind of layoffs. Karp also telling me he's looking to engage with the unions, as reindustrialization means an opportunity to teach people through AI to work in complex engineering environments. He's making the case that it creates, quote, untapped leverage, and that blue-collar workers' salaries should go up as a result of this, sort of wading into the workforce restructuring debate we've been having as AI takes root in the economy. You can see shares of Palantir on this beat and raise, though, jumping up about 3.5% right now, John, and this is a stock that you can debate.
I mean, read him and weep. Amir, go ahead.
Dude, I can't follow that up. I was gonna be hype about this chart, that look, the dynamic about Palantir, a lot of people are now questioning, like, well, can they really sustain the growth that they have? And as we just talked about before the earnings release, like 28% out of the 48 came from existing customers. And this chart is like about to be exponential. Like it is just going up and up and up and up, meaning all people that already are using Palantir, that are already getting value, they are the ones actually like, oh my God, we need more Palantir in our business. They are increasingly spending more and more with Palantir. So whenever you ask yourself, well, can you really sustain this growth for a long time? Just look at this chart. Like 28% came from existing customers, 20% from new ones. I think this is one of the most powerful charts for Palantir there is. Read them and weep, dude.
This is, I mean, for someone who talks all day, I'm a bit speechless as well. Arnie, you got any thoughts here?
I'm passing through the slides, and one thing that makes me really think about it is how annoying people were. Oh, Palantir SBC. I can't have such a shit that prints so much money only for employees. Look at what employees do and so on. Guys, do you realize that net of SBC, which is still relatively high compared with usual company, but net of this, Palantir has a 32% GAAP net income.
Wow.
So this is already big tech margin at scale, but Palantir is 1/10 of the size of all the other big tech. Imagine how it could be when it reaches a certain scale.
But it goes to show, to your point, Arnie, if at $6, $8, $20, $30, you were that worried about stock-based comp as a percentage of revenue, if that was your underlying metric for valuing Palantir, you missed it. You completely missed it. You completely missed what was happening in this story, and that they would eventually get the operating leverage to get the numbers to inflect. I mean, Karp said he wants to 10x the revenue and lower the employee count. Like that means they're starting to see that they can use AI to fundamentally change the architecture of their business. And that means getting a job at Palantir is going to be one of the hardest things in the world if they're able to grow that much while also relatively having a small headcount. This is not normal. This is not normal. What everyone here is witnessing is a company that is ready for this moment, has spent 20 years getting ready for this moment. And now the growth, which is all Wall Street cares about, the growth is here. And it's happening in a pretty dramatic way. Some more numbers. Closed 157 deals of at least 1 million, 66 deals of 5 million, 42 deals of 10 million. A record-setting 2.27 billion TCV, up 144 or 140% year over year. Remaining deal value 2.79 billion, up 145% year over year. Customer count up 43% year over year. Rule of 40, call it the rule of 90 at this point, 94%. They made $327 million in profit, which is a 33% margin. They have $6 billion in cash now, folks. $6 billion. I think that was like 5.4 last quarter. So they have plenty of cash. If the Fed continues to keep rates high, Palantir is going to be able to print net interest income, and they have a 57% adjusted free cash flow margin based on the overall revenue that they're bringing in. I mean, it's pretty damn remarkable. U.S. customer count, commercial count is up 64% year over year. AIP, adjusted operating margins of 46%. That was 44% last quarter. It actually declined quarter over quarter in Q1. That's back up to accelerating. It went from 17% in June of 2023, and now it's at 46%. So nearly tripled. And then total revenue growth is almost 50%, excluding the SPACs as well. It's pretty incredible. It is pretty incredible.
What I like to do that gives you perspective is open at the same time the slides of Q1 and look at the slide only related to US commercial. And you compare that. We went from being up 71% year on year on the commercial revenue to 93%.
Wow.
While also having a similar deal value, which also means that it's like the commercial side is exploding, but we got so much new deals on the government side, which is exactly what we were mentioning before talking about the deal summary. They collected so much revenue, so much deal in this quarter that they were able to raise the guidance from 31% for the year to 45%. That's insane. So in one quarter, they were able to collect so big deal, so many and so big deals. And by the way, this before the 10 billion notional value to raise the guidance by 14%. Imagine that companies like PayPal and so on neither grow that much.
Right.
No pun included.
Yeah, and this is the other thing that's really important is a lot of people get caught up in the valuation, and we have talked about the valuation for years at this point. But one of the things the valuation cannot necessarily explain is how much actual value Palantir is bringing to clients. And I think in a world in which Wall Street is saying there's this massive AI TAM, massive AI opportunity, we need to invest in the companies that will be pivotal, integral in this TAM towards winning. How much do we want to pay for that? Now, for Palantir, you're going to have to pay a pretty hefty price. But what are we paying for? And at its very core, I think what you're paying for is a company that has rejected every philosophical way on how to build a software company, which is juice your customers for as much as possible, don't really deliver results, and just try to make sure that they can re-up their subscription without going through too much friction, aka, let's treat it like a Netflix subscription where people forget that they even have it. That's why they pay us $15 a month. That's how traditional software companies think of enterprise SaaS. Palantir for 20 years that says, no, we will not get paid. We will not accept $1 until we deliver value. And as a result, the market cap is now also reflecting that value as well. Dominic.
Hey.
We hit $1 billion.
I know. I was watching you guys and I was like, man, I'm packing ready for this work trip. I got to go to Vegas tomorrow. And I was like, I got to get in here. I got to just speak my mind. I bought like 70 shares right before the bell closed. So I was like, you know what? They can surprise either way. And as a long-term investor, it doesn't matter. But what an amazing quarter. I mean, over $1 billion. And to all your guys' points, the quality of the business and what they're doing from a margin expansion standpoint. I mean, have you ever heard a CEO say, we're going to have to start turning away customers and we're going to have to start training up customers for faster onboarding as well as partners and developers to scale. And then that we plan on actually shrinking our headcount. Here it is when we were all, like you talked about in 2020, everyone talking about stock-based compensation, how everyone was so bent out of shape about that. Just an amazing quarter. So it's been a fun ride for all of us for over the years.
Dom, what do you think about Read 'em and Weep?
Oh, it was the best. It was the best. It's I can just picture him on a poker table, just like royal flush. Like, there you go, walk away and drop the mic. And then for them to up the revenue targets of our goal is 10x in 5 years. I think if we look back, right? If we look back to 4 or 5 years ago when we were talking about their business model and the acquisition, expand and scale business model philosophy, we're now getting our questions answered a couple years later of seeing as what one of the guys, I don't forget who had the chart up, where the scale is now getting so much higher, and it's not the current customer base or your biggest concentrated customers, it's scaling out.
Yeah.
So I just, everything we've thought about the company in our thesis is playing out for sure.
It's quite incredible. It's quite incredible to see it. Matt, any numbers you're looking at that is catching your eye here?
Yeah, I'm just sorry. I'm entering my spreadsheet, which is why I'm being quite quiet. Hey, good to see you, Dom. It's been a minute.
Yeah.
160 million in share-based compensation, which has decreased 16% now of total revenue. So it's trending in the right direction from that respect. The 128% net dollar retention, as you noted. The 10% quarter-over-quarter customer growth, 43% year-over-year is astonishing. 33% net income, whereas last year it was 20% net income margin, which is really good. And then same thing with the income from ops margin was 16% last year. It's 46%. So I think the thing that's surprising to me is I was always assuming that this business was going to level off between 30 and 40% from like a cash flow from ops sort of margin and in like an ops income margin. And it seems like I should readjust. Really think it's probably going to be north of 50%, maybe even closer to 60% in the long run. And knowing and hearing what Karp is talking about when he's talking about, obviously you have the gross margins of 82%. That's been rather consistent. You know, the low to mid 80s gross margin. If you're going to continue to keep your SG&A, your sales and general administrative costs, relatively light and be very nimble, then that just means that the more bottom line net income, cash flow from operations, everything you're going to be able to get. And so I think I've severely underestimated what the potential from a percentage basis might be, which means the more revenue you get, the more bottom line. Obviously, that's inevitable, but that could mean that I was off by 30-40% in the long term as to how much actual cash should be adding to the balance sheet. But it goes back to always talking about this. We added 500 or so million dollars to the balance sheet quarter over quarter, and it's like, well, what exactly are you going to do with that? I'm waiting for the actual more detailed SEC numbers to kind of come out so I can add in how many shares they bought back. I'm hoping, as everybody knows, they did a $1 billion allotment to buy back shares, and so far to date they've only bought back $82 million worth. So I'm hoping that they continue on the trend. Over the past few quarters, they really only have bought about $18 million a quarter. So I'm hoping now that we're starting to get to a place where we're generating on a trailing 12 month, over $1 billion in ops cash, and in a single quarter generating, over $400 billion in income from operations. I mean, I'm hoping we're going to start to increase that to something north of 25-30% to be able to just offset the dilution. But overall, I just want to see what can they invest in with all this cash, right? Where can they deploy it into these new avenues, like the future industries of the world, the SPACs, the venture arm that we were kind of talking about.
Sounds
it's just going to be
like
very
a happy problem to have.
No, it's a very good problem to have. It's just it's like a polishing thing, right? By no means is the underlying business is very healthy. I'm just trying to get into the minds of the long-term strategy behind these guys, right? Obviously, the underlying business is performing extremely well, but I'm trying to understand what the next step is, because that obviously is performing way better than everyone's expectations. The margins are going in the right direction and blowing my expectations out of the water. So with so much cash, like, what are you going to do with it?
My guess, Matt, let me know what your thoughts are here. We still believe the number one challenge is scale, right? Like to the point that they're now saying we got to pick and choose who we have as customers because obviously we're going to give X, Y, and Z corporation preferential treatment because it's a larger contract. And they said they're reducing headcount. So what if there's a chance that they actually fund former Palantir employees or who are currently Palantir employees today to start their own businesses like a North Slope Technologies, like an Ontologize, all of these different companies that are essentially resellers or professional services for Palantir, that they start training them up, giving them, capital and things to really enable them, because what we've seen is going and working at Palantir for a year is like getting a 4-year MBA. So they can actually pour back into the business from that standpoint and scale that way. I don't know, just a thought.
I really like that idea. Yeah, I mean, I would hope that'd be something that I would really welcome.
Dude, this is just, we got the call, folks, in 25 minutes. You are going to get a pretty energetic Karp, Sham, and the entire team, because when you put up numbers like this, you talk with a little bit more pep in your step. And the fact that, again, this is objectively, it's an expensive stock. We all know this. The fact that the market is giving it another 5% after hours just is showcasing they are ready to continue expanding the multiple, because what Palantir is showing is that the growth is not slowing down and the growth is expanding. And it is going to be an expensive stock forever as long as Palantir continues to execute. I think the expensive argument, is relevant. Is it that important if Palantir executes? Not really. And Palantir's executing. And it is just quite remarkable to see how much the street is now recognizing their value and how much people like us and a lot of people in the chat recognized that value 4 years ago.
Yeah, and they've been talking about it for a while, with agentic FD or AI FD stuff, but we didn't really grasp what that kind of means. But as Dom mentioned, when you're like, yeah, we're gonna 10x our revenues, but to decrease our workforce, that's just proof that seems to be a real thing. And what happens when you have AI FTEs and less labor force, but 10x your revenues? You're gonna see some pretty crazy margins moving into the future. So do we have anything to talk about? Do you want to look at some charts? I've been updating a few if you guys want.
Yeah, so pull up those charts. Let me just do something real quick. Folks, if you have not followed Chad on Twitter, he's there right there in the chat. He is one of the people that really has helped Palantir embrace the retail community. He was one of the reasons I got to go to AIPCon a year ago. And he's been engaging with us every single day, answering all of our little questions about, hey, what really is an ontology? Why is this special? Why does this work? Why is there a moat here? And never once have I seen him complain about answering a question, because he knows how hard the business is to understand, but also how easy it is to understand if you take the time. So I'm putting his link right there in the chat. Please make sure to follow Chad if you have not followed Chad on X. And then on top of that, I also just want to give a shout out to Mr. Iliano, who is the reason we have Palantir merch. He has done a fantastic job engaging the community and getting people to rep the brand and evangelize this product. So I'm going to be linking his profile here in the chat as well. And so please make sure to follow Chad and Iliano.
Yeah, I'm hoping to check my mailbox on the way home and have a sick hat like Arnie has waiting for me. But you never know.
All right. Can you see the screen fine? The numbers show up?
Yep, you're good.
Okay, good. First, let's do some commercial stats. It's really starting to look exponential in nature. Actually, as we mentioned before, accelerating, commercial customers year over year. We started to see like this downtrend from Q2 55 down to 46, now up to 48. So always positive to see. Government customers, this one will mean a lot for the future, because, government customers, how many can you actually acquire? It used to be stagnant around about 123 to 130, but the past 3 quarters have really shown some immense growth in government customers. So this one up 25% year over year, up to 157. Very bullish. Total customers, of course, Not quite our biggest net addition, 80 new ones, of course, massive. Q4 was still a bit stronger with 82. 43% year-over-year growth, now reaching 849 total customers, very strong. US commercial customers, up to 485. Let's just quickly go through some revenue numbers. We already looked at the cohort growth. 28% of the 48 came from existing customers. Let's have a look at US commercial. 92% as already seen. The one thing why we repeat this is because it really gives you context, how strong AIP has been for the business, because all of these periods here are not included in the slides, but it really shows you how stagnant it was. AIP launched, Q1, Q2 of 2023, and then just we're off and to the races. 92%, a new all-time high. US government, also new all-time high at 53%. And given the deals that we've been seeing recently, this is probably not going to be an all-time high for much longer. We're probably going to grow even higher, on a percentage basis moving forward. So very, very bullish on the government side. US commercial, I didn't update that one. Total revenues up 48%. We know that. Very beautiful chart. The one thing that kind of sucks, but you can't really do much about it, and it's not worth caring about for now. Non-US commercial, not doing much of anything still.
Skip this slide.
Skip this slide.
Wait. Can you? How much revenue did we get non-US?
145 non-US commercial, and basically the thing is the number isn't important. Look, this is from Q1 of 2022. These bars are not moving. They're going up and down, negative 2% year-over-year, up 2%. Like, they're not doing much of anything. When is Europe? Like, look, the numbers we're getting now, this like close to 50% year-over-year, that is without Europe. Like, Europe is not playing ball. Imagine if Europe also played ball and started to scale, what kind of numbers we would be seeing from Palantir. So when that day comes, it's gonna be extremely bullish. When I first heard the 1 billion, I was like, dude, Europe has woken up. Nope. Europe's still asleep. That is all US, and it just shows you like they don't really need to care about Europe yet. And then I also updated the adjusted free.
Just to say on this international, like, I want to give perspective. Like, this slide is not actually nice. Like, it shows there is somehow a problem, because it means that the commercial side outside the US is just not really growing, is as stagnant as the technology side of SoFi. This is no bueno. But
SoFi's catching strays.
Dude,
Great.
SoFi people, I don't support what he said. Don't come after me.
That's the truth. Nothing. You can't deny that. But at the same time, as Emir is noticing, wait a second. This means that there is still a massive opportunity if the brand that Palantir has right now in the US and is able to show that is able to create this snowball effect into getting more customers, achieving value, getting recognized for the value, having the reputation of being the only standard, the only way with which you can deploy AI at scale and deliver value. Guess what? Europe is so far behind economically that it desperately needs something like that. Companies like Fedrigoni, the Italian specialty leader in carton boards, desperately need something like that to keep printing EBITDA for its owners. So what we are seeing overall as a picture that I want people to have perspective on is breaking the world record in speed while also having a kettlebell of 20 kilos attached, which is the non-US side. Imagine how fast Palantir can run once this kettlebell, rather than being 20 kilos, becomes 5 kilo.
And I think, Arnie, you're not blaming Palantir for the lack of execution in Europe. Essentially, what I'm getting from you is you're blaming Europe for not being open to it.
I think, well, it's not that I think Europe is structurally slow at adopting technologies. Typically, it's at least a couple of years lag. We are more skeptical. We are not as innovative, prone to risk by nature.
Show this chart, and you will see the problem. This is the GDP growth, and you can see there is one line much above the rest, and the one at the bottom is European and Euro area GDP growth, and then you have the US GDP growth. So just for some context.
I think Peter Thiel says it very clearly. When you see a future that is positive, you're optimistic, you're just more prone to invest, to take risk. When you're scared of a future, you don't invest. You just try to survive. And that's the issue with Europe. But the moment when you start seeing that you could have some hope, you see that some leaders are actually able to achieve results, that is where the narrative can really change. So that is where I see the massive opportunity going forward.
I just have one final chart if we have time.
Yeah, of course. We got 15 minutes into the call, so we have.
This is the most important chart, guys. After 4 years, we're finally break even on the SPAC investments. We invested 450 million in total, and now cumulatively, if you count the selling of shares, most of them at a loss, the revenues, and then you cumulatively go up with that, we are at 449, and if you round that, we're at 0%. Palantir got back all their SPAC money. It only took about 4 years. Good job, guys.
It goes to show, even with something that was a financial mistake, even though we probably got a lot of experience on the front lines of these new industries, the operating leverage was enough for them to be able to break even.
Yeah,
4 years into the journey, which is not horrible at all.
We suffered from some drama, some big drama for that. But I think what they learned overall, apart from the revenue, also what they learned was actually very beneficial to start thinking into, okay, when we deal with companies that are not already established, sophisticated leaders, but we're talking with companies that are still trying to figure out how to set up their business model, what are the real needs that these companies have? Are we really being able to relate with these new builders in the same way? Because remember, the way Palantir wants to get the entire market is achieving the highest leader possible, but at the same time becoming the platform with which, on top of which, you build your business from scratch. So all those lessons from SPACs, I think they were also very beneficial to start learning how to communicate with the startup ecosystem, which seems very, very important, especially for the defense tech side, where Palantir wants to become like the reference player for helping these companies accelerate, reach VC money, enter into the DoD, and so on.
I have two questions. One for the technical analysis guys. Could we see with just how high this thing has flown for so long and is such a high rise that a course correction on a hard correct in the next couple of weeks? I know that's hard to answer. But I'm just curious if we see that, just because the one narrative we'll hear from mainstream media is valuation.
But see, Dom, they've been saying that since 50. So could it happen? Of course, anything could happen. But if valuation's the reason to have that course correction, not with these numbers.
Yeah,
anything could happen. But with these numbers, it's hard to be like, well, valuation. I mean, it could happen.
There's not really a number that they can point to that would bring it back down. Yeah. And then the second question, it seems like they have a pulse on the future of the scalability of how scalable AI really is, to the point where it's like it's really hard to get a grip on where you can think that they'll be in the next year from now from a revenue perspective and stuff. It's really hard to predict, because this is the only software company that I've ever run into that can quote their product based on ROI, continuously back up the ROI, grow the customer relationship, and keep scaling it throughout the business. I ran into at a work dinner someone who's running Palantir, and they said it was, transacting with Palantir was unlike anything else, because it wasn't like a set price but it was the ROI that they would deliver for your business. But on the same point, with that, they also, he said, had the smartest people that were just never run into anyone like that.
Well, I will say two things to that, and then these guys can answer. Number one, in terms of, you know, the stock getting hit because of valuation or whatever else it may be. Again, anything can happen from a macro perspective, recession, whatever that may be, and that could hurt it. But at this moment in time, if you're trying to find a red flag, it's hard to find the red flag. And so, like, if the
not saying there is one, I was just saying because it just keeps going, you know.
Yeah, no, I'm saying in general, for anyone trying to find the red flag. I mean, I'm sure when we get to the nitty gritty, maybe we'll see some numbers here there that don't look the best. But if there's not a lot of red flags and valuation over the next 5 to 10 years, given this tailwind of AI that is ahead of us, maybe is not the single most important thing people would care about because of the just crazy size of the opportunity, then I think that's what can keep the shares higher and expand the multiple as well. In terms of the argument about ROI and the person you had dinner with and how they were saying, you know, the software is expensive, but like the value we get is what matters. I think that's the thesis. I think that's it. I think Palantir built this business the right way. It is so hard to build a brand, a startup, a company the right way. Is right subjective? No. Right is not subjective. There's wrong and there's right. Wrong is fleecing your customers, selling them a load of shit, and then still trying to get paid. Right is delivering value and then getting paid proportional to the value. And ironically, when you deliver value, you sometimes get paid way above proportion to the value you bring because so many companies don't bring the value. And as a result, I think that's why we have the multiple that we have, and that's why Palantir is trading.
And I will also say one of the comments that the customer said, which was really interesting. And Matt, I know you've been a part of talking to them before. Was if you're not happy with something or feel like you're not getting the value you deserve out of the platform, they will make it right. They will go and figure out another problem to solve, and they will have their forward deployed engineers figure out what needs to happen. There's just not many businesses willing to do that, and you know, it's why their customers are staying and expanding.
No, yeah, their customer service and their engineers are literally second to nobody. So I'm with you there, Dom. But I do want to play devil's advocate there. I mean, yes, this is a blowout quarter. You know, I can't deny, you know, $1 billion in revenue and where we are from a trailing 12-month perspective when it comes to the net income and the cash flow from operations. You know, getting to 764 and about 1.6 billion respectively. That's admirable, but you still think about it, we're trending towards a $400 billion market cap here. And so when you think about it, I mean, going back to Dom's point, yes, great quarter, 100%, even on a trailing 12-month basis though, and I understand we're still growing at a very fast clip, right? Of, you know, looking like trending towards 40-50% on an annual basis. I get that. The thing that I'm looking at though is the price to kind of earnings from this perspective is over 500x at this point, and the price to cash flow ops is over 250x. So even if you were to, as we've talked about in the past couple, you know, Palantir weeklies, and we've talked about in previous valuation discussions in the past, how many years ahead do you want to pay for some of this growth? And I think the thing that I think we all struggle with, which is why you continue to get this multiple, is people are trying to understand where the terminal rate of revenue really lies with this company. They're trying to understand, is this going to be a company that gets you know, $40 billion a year, like Alex Karp is kind of referencing to? Is it going to be a company that gets closer to $60 billion a year? And that's all going to be trying to be where then you can start to apply the multiples, right? Because if truly you do get the revenue to the 10x that Karp is kind of referring to, the trailing 12-month is about 3.4 billion, right? And where we're going to be for fiscal year 2025 is approaching 4 billion. And so if that's a 10x from there, you're talking about 35 to 40 billion dollars. And then if you add, let's just say, the 50% cash operations cash to that, I mean, you're talking anywhere between 17 to 20 billion dollars on an annual basis. of cash to the bottom line. That's where you start to add money. But you think about it, it's like, well, even at a 20x multiple, doing all that growing, right, at a 10x from here, you're still at a 20x multiple, which is relatively fairly valued. But are you actually going to hit that 10x? I guess. But people also questioned Karp in the past, saying they're going to get to $4.5–5 billion in revenue by 2025, and here we are, kind of knocking on that door, right? So I don't know. I'm trying to play devil's advocate. I'm not trying to be bearish or bullish. I'm just trying to point the numbers out to where they are. But overall,
I personally think.
other than that, I'm kind of just speechless.
Mhm.
It's an insane quarter.
Okay, it's important to be aware of the past, but only to the degree that helps you understanding the future. Because we're not talking about a railroad company where you can reasonably expect that the trading past 12 months are more or less similar to the next 12 months with like 10–15% at most growth difference. We are talking about something that is evolving, that is a very strong wind. So it's important to know, okay, based on the past, we are at a very expensive territory, but the past is not really indicative to what's next. I think we should focus more into, okay, what are the ingredients as of today that generated the past, yes, to understand the machine, but better to understand, okay, what are the current ingredients that are filling the business so that we have a sense of what's coming next. And when Karp says, look, we're looking to reach a size that is 10x over the next 5 years, while also rising the guidance of 45%, okay, that's already crazy good compared with the 30% range we were craving for before. But if you do a math, 10x in 5 years, if I understood correctly, right? Do you confirm he said 10x in 5 years? That's more or less a 60% CAGR of the revenues. So in Karp's mind, obviously, execute is still needed. The company should grow at around the 60% CAGR, so every year going forward. I think we should ask more than, what about the trailing revenues? We should ask, okay, this is what is in Karp's mind. Are there any hints, any substance that make us think that this is a reasonable expectation for the future? If so, how can they achieve that? Or if not, okay, no, this doesn't make sense, and thinking in terms of that.
Yeah, and I have a simpler answer. The market cap was 350 billion yesterday. It's almost 400 billion right now. It was 200 billion a couple months ago. Like, at what point does the bright line disappear? Because when you think about a bright line for a company, right, in terms of valuation, you would say, okay, Palantir doing 4 billion in revenue, 80 billion is good market cap, 100 billion is good market cap, 150 is a bit overvalued, 200 is about 250. Like, we can just keep throwing numbers out there as much as we want. The market has not cared at all about valuation. Even though we have every week on Palantir Weekly, we're discussing because we're trying to be responsible, all of us have been humbled, every single one of us here, because we could not comprehend Palantir being able to get to this valuation because, quite frankly, we didn't see the market actually valuing them as much as we thought they would be valued. So then the question becomes, is it a meme stock? Is it just artificially valued at 400 billion? Is it a whole lot of bullshit that is just propping it up? Or is there something so real and so deep? And I agree with you, Matt, the numbers, expensive multiples, but is it something so real that the market says, hey, 10 years from now, they will grow into that? And I think, with this quarter, if they have more quarters like this, then hopefully it'll be the latter versus the former. And if that's the case,
no, I think
sorry, Dom, go ahead.
No, go ahead, Matt.
I was gonna say, I have no doubt they'll grow into it. But there's never been a doubt in my mind. I've always said, I believe now that this is easily over $1 trillion company. It's just how many years forward are you willing to buy? And maybe you're right. Maybe this does actually show up and does 10x, and maybe I'll eat my hat. In that respect, that if it does 10x within the next 5 years, then obviously the price will probably climb. To $250, $300 a share easily with no problems, especially if it's not slowing down, and it'll grow, way past that. I guess it all just depends on
It depends
how
on
quickly
growth.
we
But
get
you're
to
right.
60%.
You're right. If they don't grow, this thing collapses. You are 1000% right. And this is just another quarter where they put up the growth. So I think the next 10 years is going to be a question of, can they sustain it? Right. And if they do,
Imagine
maybe
the
it
pressure.
continues.
Look at this. I think, what if I tell you that Palantir is fairly valued at 171?
Oh, what spreadsheet magic did you just do? What spreadsheet magic?
Look,
Did
if
you
you
just-
assume 60% margins, and if they can compound at 36%, it's worth 171. If you only look at, a discount rate that's using market implied risk. So, I mean, it's not even that crazy. And I mean, when you hear the talk about AI FTEs, the margin expansion, the Karp, talking about, future revenues are gonna 10x from here in X amount of years. Like, if you can assume 36% compounded growth and 60% margins, it is worth 171 intrinsically. Like, it's not even that crazy. Like, I'm just saying. You can stare yourself blind at multiples. For Palantir, I think it makes no sense at this stage. And who cares if it's 500, 700, 800? Like, it doesn't even matter. But intrinsically, it's not even that crazy at 171. I know that sounds crazy. It is. Okay, let me be clear. My own personal valuation of Palantir is not above 100 yet. I will have to revalue it. It is somewhere around 75. But if you make these assumptions and you believe, they can have 60% margins and they can compound at 36%, then intrinsically it's worth 171 today. That's what I'm saying. Now, to be clear, it is not my personal valuation. Just putting that out there. But 171 with those assumptions.
All right, Q2 2025 earnings call starting now.
Business that may be considered forward-looking within applicable securities laws, including statements regarding our third quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which would cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our tremendous second quarter results demonstrate how Palantir is redefining what is possible with enterprise AI. We remain maniacally focused on value creation for our customers. Our U.S. business is the engine of this transformation. U.S. commercial led with 93% year-over-year revenue growth, outpacing our U.S. government revenue growth of 53% year-over-year. Our overall U.S. business revenue grew 68% year-over-year and 17% sequentially, and now represents 73% of total company revenue. We surpassed $1 billion in quarterly revenue for the first time, as our overall revenue growth continued to rapidly accelerate to 48% year-over-year growth in Q2. Through this record-breaking quarter, our Rule of 40 score continued to climb, reaching 94 in Q2, which is up 11 points quarter over quarter, particularly noteworthy given the scale of our business. As AI continues to relentlessly advance, the market has become increasingly aware of the most important and fundamental technical reality. LLMs, on their own, are at best a jagged intelligence divorced from even basic understanding. In one moment, they may appear to outperform humans in some problem-solving task, but in the next, they make catastrophic errors no human would ever make. By contrast, our ontology is pure understanding, concretized in software. This is reality, not rhetoric, and enterprises are experiencing this reality keenly. LLMs simply don't work in the real world without Palantir. This is the reality fueling our growth. We booked our highest TCV and ACV ever last quarter, with $2.3 billion in TCV and $684 million in ACV. We closed a whopping 157 deals worth $1 million or more, of which 66 deals were worth $5 million or more, and 42 deals were worth $10 million or more. We continue to see expansions with our existing customers, as our top 20 customers now average $75 million a year in trailing 12-month revenue, up 30% from a year ago. The impact our software is delivering for our customers as they cross the chasm is ever widening their advantage over the AI have-nots. Citibank shared that the customer onboarding process and relevant KYC and security checks that once took them 9 days now take seconds. Fannie Mae recently announced they're working with Palantir, decreasing the time to uncover mortgage fraud from 2 months down to seconds, saving the U.S. housing market millions in future fraud losses. Nebraska Medicine president and COO noted they saw a 2,100% increase in discharge lounge utilization, which is the equivalent of adding another unit to their hospital. They even noted, quote, "We've been using the term a Palantir unit of time, and that represents when we're driving value in less than an hour." Lear Corporation recently signed a 5-year extension. Over the past 2.5 years, they have leveraged Foundry and AIP to support over 11,000 users and more than 175 use cases, including proactively managing their tariff exposure, automating multiple administrative workflows, and dynamically balancing their manufacturing lines. Their CEO highlighted that their enterprise-wide adoption gives them, quote, "a first-mover advantage in the automotive industry, which will be difficult to replicate." Our U.S. commercial business exited Q2 with a 93% year-over-year and 20% sequential growth. Due to its acceleration, U.S. commercial comprised 31% of our Q2 revenue versus 23% a year ago. We continue to focus on delivering AI production impact, evidenced by the strength of new starts and expansions at existing customers. We're seeing new starts with higher ambition and existing customers expand their work at a faster rate. A healthcare company completed a bootcamp in April, then signed an $88 million TCV deal a month later to coordinate and automate patient care across facilities. An American telecom company started working with us in 2022 and has increased their contract 10x since then and is now projecting hundreds of millions in cost savings. Our U.S. government business grew 53% year over year and 14% sequentially last quarter, driven by the impact we're delivering across civil, intel, and defense, including greenfield efforts. U.S. Space Force Space Systems Command awarded us a $218 million delivery order to support seamless synchronized multi-domain warfighting for the space and air operational communities. The ceiling for our Maven Smart System contract was increased by $795 million to prepare for what they expect will be significant demand from combatant commands for our AI-powered software capabilities over the next 4 years. Last week, Palantir was awarded a 10-year enterprise agreement with the Army, totaling up to $10 billion, consolidating 75 contracts into a single contract. The Army is one of our longest-standing customers. We are honored to embark on this next phase together. We remain focused with deep respect and dedication on equipping our warfighters with decisive advantages over our adversaries. Looking towards the back half of the year, my enthusiasm for our business is at an all-time high. With determination and persistence, we'll continue delivering exceptional AI production impact for our customers, running full speed at the critical challenges they entrust us to solve. I'll now turn it over to Sham.
Thanks, Ryan. 20 years of grinding has built a unique moat and a massive lead. Our products were built for this moment, and the numbers show it. Realizing value from AI in the enterprise requires the elegant integration of LLMs, workflow, and software. And that's only possible with ontology. As LLMs continue to improve, it only further accelerates the value realization, and therefore the value of our products. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on the AI demand both now and in the world ahead. A substantial development over the last couple of quarters is the realization and acceleration of our vision of ontology web services as an architectural concept for our customers. AIP isn't just software our customers use, it's software our customers are building their software on. Software companies are replatforming away from the highly unopinionated services and building blocks of the hyperscaler stack onto AIP with its highly opinionated building blocks that get you to value 10 times faster. Chris Johnson, the co-CEO of Teletracking, who recently replatformed on AIP, said that he was flooded with inquiries from CEOs and CIOs when he went public on his partnership with Palantir. Replatforming on AIP has enabled customers to leapfrog their competition and beat them to market. And this will continue to be both a significant area of investment on our product roadmap and an accelerating growth opportunity for the business across commercial and government. I mentioned this last quarter. On their earnings calls, CEOs have been highlighting the transformative impact of AIP on their organizations. That trend continues. But also this quarter, you can hear from the frontline workers about the same transformation AIP is bringing them. AI is giving the American worker superpowers. At the All In Winning the AI Race Summit in DC, an ICU nurse, a factory worker, a hospital administrator, an electric vehicle battery maintenance technician shared how AI is making them better, faster, and more productive, giving them more time with patients, more time solving problems, and enabling more workers to access the job market. Our investments in AIFD are accelerating the already eye-watering time to value for our customers and providing customers with capabilities to solve bigger and more complex problems independently. AIFD is designed to enable autonomous execution across a wide array of tasks, including creating and editing the ontology, building data transforms, creating functions, debugging issues, and building applications. With its own closed-loop error handling, AIFD can identify and correct issues and notify human users if needed. And it's been designed for seamless collaboration with humans in the loop through integration with AIP's branching. Warp Speed, our modern manufacturing operating system built on AIP, continues to deliver for our industrial customers, from nuclear companies to the defense industrial base. With MRP Speed, a component of Warp Speed, one of our customers remarked that balancing the production line has shifted from 1 day to 1 hour. We have seen a dramatic set of opportunities open up in U.S. shipbuilding as America gets serious about fixing its maritime industrial base. China built more ships last year than we have built cumulatively since the end of World War II. Now the mighty American engine of innovation is spinning up and tackling this problem head on. Maven Smart System met its moment in recent operations of great import. Maven adoption continues to grow, with usage doubling again since February. Last quarter, I mentioned that usage doubled in the first 9 months of 2024 and doubled again in the subsequent 5 months. This is on top of that. With that, I'll turn it over to Dave to take us through the numbers.
Thanks, Shyam. We had an unprecedented second quarter, surpassing $1 billion of revenue in a quarter for the first time and delivering our highest Rule of 40 score ever of 94. Q2 revenue growth accelerated to 48% year over year, exceeding the high end of our prior guidance by nearly 1,000 basis points and representing a 2,100 basis point increase compared to the growth rate in Q2 of last year. On the back of this continued strength, in the third quarter, we are guiding to revenue of $1.085 billion, representing over 8% growth quarter over quarter, our highest ever sequential revenue growth guide, and 50% growth year over year. We're also raising our full year 2025 revenue guidance midpoint to $4.146 billion, representing a 45% year over year growth rate, a 9-point increase over our full year 2025 revenue guidance last quarter, and our largest ever full year revenue guidance raise. We are also raising our full year U.S. commercial revenue guidance to an excess of $1.302 billion, representing a growth rate of at least 85%, 17 points higher than the guidance we gave just last quarter. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 68% year over year and 17% sequentially in the second quarter. Our U.S. commercial business grew 93% year over year and 20% sequentially, and our U.S. government business grew 53% year over year and 14% sequentially. We delivered these outstanding top-line results as adjusted operating margin expanded to 46%, exceeding the high end of our prior guidance by nearly 300 basis points. Our revenue and profitability drove an 11-point sequential increase to our Rule of 40 score from 83 in the first quarter to 94 in the second quarter. We continue to generate strong cash flow with second quarter adjusted free cash flow of $569 million, representing a margin of 57%. Turning to our global top-line results, second quarter revenue grew 48% year-over-year and 14% sequentially to $1.004 billion. Second quarter U.S. revenue grew 68% year-over-year and 17% sequentially to $733 million. Excluding the impact of revenue from strategic commercial contracts, second quarter revenue grew 49% year-over-year and 14% sequentially, and second quarter U.S. revenue grew 68% year-over-year and 17% sequentially. Customer count grew 43% year-over-year and 10% sequentially to 849 customers. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 30% year-over-year to $75 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 47% year-over-year and 14% sequentially to $451 million. Excluding the impact from strategic commercial contracts, second quarter commercial revenue grew 49% year-over-year and 14% sequentially. We closed $1.1 billion in commercial TCV bookings, representing 185% growth year-over-year. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Second quarter U.S. commercial revenue grew 93% year-over-year and 20% sequentially to $306 million. Excluding revenue from strategic commercial contracts, second quarter U.S. commercial revenue grew 95% year-over-year and 20% sequentially. We had our strongest quarter of U.S. commercial TCV booked at $843 million, representing growth of 222% year-over-year. Over the past 12 months, we closed $2.8 billion of U.S. commercial TCV bookings, a 141% increase from the prior 12 months, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 145% year-over-year and 20% sequentially. Our U.S. commercial customer count grew to 485 customers, reflecting growth of 64% year-over-year and 12% sequentially. Second quarter international commercial revenue declined 3% year-over-year and grew 2% sequentially to $144 million. For our international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our U.S. business. Revenue from strategic commercial contracts was $5.1 million for the quarter. We anticipate third quarter 2025 revenue from these contracts to be between $2 to $4 million, compared to $10 million in the third quarter of 2024. We anticipate 2025 revenue from these contracts to be less than 0.5% of full year revenue. Shifting to our government segment. Second quarter government revenue grew 49% year-over-year and 14% sequentially to $553 million. Second quarter U.S. government revenue grew 53% year-over-year and 14% sequentially to $426 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Second quarter international government revenue grew 37% year-over-year and 11% sequentially to $127 million, bolstered primarily by our continued work in the UK. We closed our highest ever quarter of TCV bookings at $2.3 billion, up 140% year-over-year. This eclipses our prior highest quarter of TCV bookings in Q4 2024 by nearly $500 million. Net dollar retention was 128%, an increase of 400 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q2 of last year, as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the second quarter with $7.1 billion in total remaining deal value, an increase of 65% year-over-year and 20% sequentially, and $2.4 billion in remaining performance obligations, an increase of 77% year-over-year and 27% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 82% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $464 million, representing an adjusted operating margin of 46%. Q2 adjusted expense was $539 million, up 9% sequentially and 27% year-over-year, primarily driven by our continued investment in AIP and technical hiring. While we expect adjusted operating margin to continue to expand for the second half of the year, as in prior years, we expect a significant ramp in expenses in the third quarter due to the seasonality of new hire starts. We remain committed to investing in the most elite technical talent, as well as a product pipeline and AI production use cases, all while delivering on our goals of sustained GAAP profitability. Second quarter GAAP operating income was $269 million, representing a 27% margin. Second quarter GAAP net income was $327 million, representing a 33% margin. Second quarter stock-based compensation expense was $160 million, and equity-related employer payroll tax expense was $35 million. Second quarter GAAP earnings per share was 13 cents. Second quarter adjusted earnings per share was 16 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 94% in the second quarter, an 11-point increase to our Rule of 40 score from the prior quarter, and our 8th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 91% for the full year. Turning to our cash flow. In the second quarter, we generated $539 million in cash from operations and $569 million in adjusted free cash flow, representing margins of 54% and 57%, respectively. Through the end of the second quarter, we repurchased approximately 2.5 million shares as part of our share repurchase program. As of the end of the quarter, we have $899 million remaining of the original authorization. We ended the quarter with $6 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2025, we expect revenue of between $1.083 and $1.087 billion, and adjusted income from operations of between $493 and $497 million. For full year 2025, we are raising our revenue guidance to between $4.142 and $4.150 billion. We are raising our U.S. commercial revenue guidance to an excess of $1.302 billion, representing a growth rate of at least 85%. We are raising our adjusted income from operations guidance to between $1.912 and $1.920 billion. We are raising our adjusted free cash flow guidance to between $1.8 and $2 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Well, as usual, I've been cautioned to be a little modest about our bombastic numbers, but it's honestly, there's no authentic way to be anything but have enormous pride and gratefulness about these extraordinary numbers. Now, when you're obviously looking at numbers, there's numbers and what do they mean? So if you take, I would say, the truly once in a generation number of 93% growth in US comm off of a large base, or even 53% growth in USG, which is astonishing, even though obviously it shows where the government is downstream from general trends in AI, or the 68% growth in the US. You still have to say, why are these numbers even more astonishing than they appear? Well, obviously, you would look at what is the meaning of the number, and the Rule of 40 basically tells you the meaning of the number. And if that number is somewhere in the 50s, 60s, 70s, that's pretty baller. When it's the single most impressive number I think any enterprise software company's ever seen, there is something anomalous going on. And obviously, the prediction that all the attendees would be downstream from the value, so it would be chips and ontology, is being proven. Not as a thesis, but as a reality. And then you would obviously ask, well, what is the base? We're now working off of a very large base, getting to we did our $1 billion, so it's a very significant run rate. But then I would say, if you look at a kind of more qualitative version of Palantir, we did this with no compromise in terms of what we believe. We still believe America is the leader of the free world, that the West is superior, that we have to fight for these values, that we should give American corporations and most importantly, our government, an unfair advantage. We've demonstrated in every area and arena of American life and international life that we do deliver an unfair advantage for our allies, our friends, and our compatriots. We have done this by creating a company where every single component is value accretive. There are almost no parasitic elements to this company. We have a small sales force. We have very little BS internally. We have a flat hierarchy. We have the most qualified, interesting people, heterodox in their beliefs. We have an orchestration engine that deploys for deployed engineers everywhere, a model that everyone despised and disdained until literally a quarter ago and thought would lead to a low multiple. Guess you're wrong. We have a series of products that are on the front line, most notably Ontology, but also Foundry and Maven. And this is a confluence. This is the perfect time for Palantir. And I would also say, at the risk of saying the obvious, this is a perfect time for a revolution in the United States of America. We are very, very bullish on America. We have some really crucial and important clients internationally, large clients, commercial clients in Europe, and also government clients outside of America that we're proud of. But this is an American revolution. It's being led by Ontology and chips, and also to some extent large language model providers. We are also anomalously bullish on all aspects of American life, including and especially people in the blue collar. Sham and others are leading our charge to arm the working class, blue collar workers with AI agency enhancing skills. AI is an agency enhancing revolution. Our numbers show that. We've seen on the front line in the United States government that people with less than a college education are creating a lot value, and sometimes more value than people with a college education using our product. We're also going to reach out to labor leaders and help them organize ways that workers can earn AI enhanced earnings. But in general, what you see in our numbers, and the reason it's so successful, is our clients and partners are downstream from our unit economics, and they want our unit economics. And we are teaching them ways in which to work, both cultural and with our products, that will allow them to get unit economics that look like 94, 93, 68, 53, respectively. Those numbers are astonishing, incredible, and we're planning to share them with our partners via exposing them to a way in which to work in an AI revolution so that they have the same kind of agency we do. I run around U.S. commercial telling corporate leaders, if you want to have your First Amendment rights to an opinion again, get our unit economics, and then you too can say things that are true in public like we do. It's very motivating to people and very motivating to us. So thank you for all of our supporters, and we should entertain questions, but this is a once in a generation, truly anomalous quarter. And we're very proud, and we're sorry that, our haters are disappointed, but there are many more quarters to be disappointed, and we're working on that too.
Thanks, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a question from Christina, who asks, beyond just using LLMs, how is Palantir making AI more useful for frontline workers and decision makers, not just data scientists?
Well, thanks, Christina. There's a surprising amount of doomerism that comes out of the ivory tower, the folks who are doing AI research. We spend all of our time at the front line with the factory worker in the fire cell, and the vibe could not be more different. What we observe is that AI is giving the American worker superpowers. Look at the nurses in the ICU who have more time to spend with their patients, less time munging around collecting the clinical notes to understand what care to deliver. Or the factory workers in the submarine industrial base who get back 3 days of quoting a part to actually spend time solving problems in production. And perhaps the use case that I'm most excited about around Panasonic Energy, make electric vehicle batteries, actually being able to develop AI to train their workers to manage this exquisite high-end Japanese technology, where the background of the workers is casinos. And I think this is job expanding. It's empowering. To Alex's point, it's really pro-agency, pro-creativity. And that's a big reason why we've leaned into creating the American Tech Fellowship. Our lived experience is that some of those creative AI applications are coming from the blue-collar worker, the autodidact that has a little bit of self-taught knowledge, not the classically trained computer scientist, not just using AI, but more importantly, building AI applications that are changing their business. We want to find these people, we want to empower them, credential them, put them through the training, and unleash them on the American economy.
Thank you, Sham. Our next question is from Dan with Wedbush. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Thank you. And I'm sorry also that the haters aren't satisfied, but look, can you just hit on, you're basically doing this without a direct sales force. So like, are you gonna go down that path, or it's just gonna be, prudently going down, just given the type of growth you're seeing? Can you just like walk through how you're thinking about that, just given such the massive success you're having, essentially with no direct sales force?
Yeah, for those of you who are new to Palantir, one of the many controversial, we were doomed to failure decisions we made was that we rejected an idea of like, basically the way software is often done, useless product that becomes parasitic, you can't get rid of it, and you have 1,000 steak dinners all convincing you by something is useless, you can't get rid of. And we believed that we would always be downstream from the value we create, and we would be able to capture that value. And if you look how this company is organized in government and commercial, it is all built around those ideas, including internal orchestration, including our flat hierarchy, including the products we deliver. Our primary sales force now, and I think likely in the future, are going to be current customers telling other customers, if you want this to work, bring them in and listen to how they orchestrate their culture inside your culture with their products. And it's not that we won't have direct salespeople, but what's really helping us now is the increased credibility so that people use more of our product on day one, so that they're not using the Foundry product of 3 years ago. They're really aspiring to what can be done with ontology and large language models and our FDE structure. And the disadvantage of this is, you don't have 10,000 people roaming around selling something they don't understand. But the advantage is we go from, once we come in the door, we come in with enormous credibility. So the person we're selling to believes we will make them a lot of money, save them expenses, or we will make their soldiers safer and more lethal. And they believe it because they've heard it from someone they trust, and or in the US economy, there are a lot of people that go from one job to the next. So that somebody we meet in one place very likely will be somewhere else in a year or two. And the first call we get, in fact, I was just doing a customer call, partner call. We're very early with these people. The story was, hey, I got blocked at my last enterprise. They wouldn't let me buy Foundry. I've been following Foundry and now Ontology. First call was to us. And then when the meetings have shifted from, hey, we may not know how to use you, to very much tell us how we could create the kind of leverage you have. And that's why these numbers are going up at the top end and at the bottom end, because we're coming in with a different kind of credibility and leverage. So in the near future, the 10x revenue we are going to get in the US over the next, in my view, next 5 years. But certainly what we forecasted for this year, it's really people saying, wow. I mean, and then you have, and then everyone talks about us on the earnings calls. So like when you see AIG or others saying, I believe I can dramatically change my business at a lower cost. CEOs, CIOs, chief revenue officers, the whole group are like, get them on the phone. And this just makes our whole thing easier, because we do not have time or interest in spending all the time we did in the past starting from complete ignorance. We're starting from a much higher level, and then the higher level allows us to ratchet up. So that's going to be what we're going to do. Obviously, we're going to continue. Samir and others and Cam have built a very small, nimble sales force. We have people who've been here for a long time doing very large deals. We have Ryan, who's doing this, organizing the contracts full time. But I mean, I'll let Ryan speak to this. The leverage we have in these calls, I don't mean leverage just financial, the leverage to create the value that is upstream of what we get paid. We are very focused on the value creation and then collecting later.
Yeah, and what we're seeing is like the leadership of our customers are coming to us saying, we're seeing it start more quickly, expand more quickly, and expand deeper. And they're coming to us now at the beginning saying, how do we roll this across the whole enterprise?
And they're willing to be more experimental, because we were at a big customer and it's like, look, we'll do this in this side of the contract. Why don't you let us do the rest and we'll just see the value? see the value. We'll discuss it later. Yeah. And then this is yet another advantage America has that we underestimate. It's so plastic. If you compare America to, say, Germany, the way in which they build industry, they purchase software, they judge software, there's a pattern that is etched in stone there. But in America, people are very open to value creation, and they're under more pressure. And also, people inside the company have more upside in the company. They have more equity. They want things that work. They don't want theory.
Thank you both. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Greetings.
I have two questions. One on the AI action plan that the White House put out a couple of weeks ago. You have been part of this process through recommendations. What excites you the most, and where do you think there is still work to do? And the second one is about talent, because to make sure that you are part of the dominant software of the future, you have to make sure that you keep attracting, retaining, and training the right talent. And we are seeing this, battle over talent in software companies right now. How you make sure that you are ahead of everyone else and keep attracting the right people?
On the first bit with the AI action plan, I think it's incredibly exciting. Essentially, we're taking all the brakes off. AI really is an empirical journey, and you have to roll up your sleeves and actually focus on the implementation of it. It's a clear recognition that having an American open AI tech stack that we all build our solutions on is absolutely crucial and important, and that perhaps we had been spending too much time hand-wringing and not enough time doing things. So not only Palantir, but I think the entire industry and the customers of the industry are really excited to get to work and to realize the value that we can have by doing this, and the support and the subsequent follow-on investments that this implies. And on the talent side, I think the most important thing is giving people access to problems that matter. We've seen our retention be quite strong. There's really no other place. So you think about the number of production workflows that we have around AI. There's a set of folks who like to just do research, who like to just think about what is possible. But at this point, we are able to attract and retain and motivate people who actually want to bend the arc of history here, work on the problems that drive outcomes.
This is what Shyam's saying is so right. Part of the value of doing these calls is, like, if you are a highly talented person and would believe that the West is superior, or at least tolerant of me telling you it every day, you will not find a place anywhere I've seen. And now in over 20 years, I've interacted with almost every agency in the West, many of the largest companies, many of the smaller companies. You will not find a place that is comparable on time of joining to full agency like Palantir. We have this, and by the way, we're ratcheting this up, like more internal orchestration. You come here from the time you come here to the time you're working on something that literally will be in the paper, in the economic section, in the consumer section, or in the government section of the paper. It could be 3 months. There is nothing like that. A, and B, now that everyone knows this is by far the best credential in tech. If you come to Palantir, your career is set. And the other thing that is not exactly related that I really just love about that, if you did not go to school, or you went to a school that's not that great, or you went to Harvard or Princeton, Yale, once you come to Palantir, you're a Palantirian. No one cares about the other stuff. They don't care what your parents did. They don't care how rich your parents are. They don't care where you went to school. They care about, were you at Palantir? How are you viewed at Palantir? What did you work on at Palantir? And so we are making a new credential independent of class and background at Palantir. That is the most important credential in tech. And that's one of the two reasons, agency plus that we are doing very, very well on the talent acquisition and retention side.
Thank you both. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Maybe stop talking to all the haters. They're suffering. Don't tell them about how important the ride has been, how exciting it's been, how much you've enjoyed the ride, how much fun it is to write little emails to analysts that spent 20 years learning about software and have been wrong about every quarter. maybe just, just don't talk to them. There's some suffering going on. But for the rest of us, we are enjoying this time and we're enjoying it with you. And our performance and your support of it is both important because you deserve it. And we are grateful that you gave it to us, especially, and I definitely have not forgotten, there would have been no DPO. We would not have gone from our low share price to now. We would not have many of the clients we have, and we wouldn't have some of the pride we have without you. But I would also say our ability to win while sticking by what we believe is important for the world, because we live in a world where people are purveying half-truths, partial truths. Palantir gets attacked just because we help make this country even better, because we support the values, because we defend it. And, us being able to win while having an opinion does have an impact on the world, if only because the people who think we are wrong or not good have to be a little jealous and suffer. And you know what? That's a good thing too. So I'm very, very proud of this quarter. And by the way, obviously to all the Palantirians who made this happen, behind the scenes, we are just, to use Sham's term, grinding. And every day and all the time on our most important things we're working on. And, we've had deployments here that because of their criticality, our people are working around the clock for half a month, around the clock on a cycle. And they're really proud to do that. And they have changed the arc of history, and your support inside the company and outside the company. And also, we're asking people to work in an environment when they come in here that is very different than anything they've ever worked on. They most of them come from university where they've just been engaged in platitudes. Now it's frontline where things matter, and we do things very differently than anyone else. And the fact that Palantirians have aligned to do this, to work as a phalanx in the service of what I view as a higher purpose, and I think many agree with me, is an enormous accomplishment. And especially I speak for all of us who work with these people. This is a very special environment, and I'm super proud to somehow ended up being your leader. So thank you.
Thank you. That concludes Q&A for today's call.
All right. That was Palantir's Q2 2025 call. Amir, I'll give it to you first. What are you thinking?
Look, I think these analyst questions were some of the best in a while. Dan, I don't know if he was on the toilet this time. Last time he was on a stroll. About the Salesforce, I think the answer was really good. I think the question wasn't really worded the best, but, Karp expanded a lot, and we got some real insight. Basically, that their primary Salesforce is what we have been, speculating. Is no, the current customers are the Salesforce. They are telling future customers, either you're on this ride or you're about to, be left behind. And it was interesting that he mentioned that, the capabilities that they can offer today are so much superior to what they were able to offer 3 years ago. Of course, I have never used the products. Maybe Matt can relate to that. But the conversation being already okay, we need to create value from day one and show off all the capabilities immediately, because they have so much credibility, about being okay, tell us how to create the kind of leverage you have, was the quote. And also, Mariana had a very interesting question, a hot topic lately, poaching talent. We've been seeing all these crazy offers from Meta, $1 billion signing bonus and stuff. It's okay, how are you going to retain the best talent in the AI space, basically? And, what he mentioned wasn't yeah, we're gonna overpay, we're gonna outcompete. No, he's no, people want to be here, and that's just so powerful. Yeah, exactly. The mission, and also time to value. I don't know how long it takes typically, but he said from the time you come to the time you work on something useful that's going to be in the paper, that's 3 months. And he said it's not comparable to any other company. So you make impact immediately at Palantir. And also the thing about being the best credential in tech, I don't know why he mentioned that, because that would imply that you kind of want to leave for another place. So that was kind of weird. But yeah, overall, 2 good questions. A lot of other comments we'll get into, but I'll leave the word to someone else for now.
Matt Money, you are unique out of all of us in that you've actually worked with the software at your company. Because of working with the software and the people that make the software so great, you bought shares at DPO. What are you thinking after what Karp said there?
Well, I think I look at it, what Sham said in this particular call, and it actually, like, I don't know why, but I've thought about this a million different times, but not in this way. We always hear about the steak dinners and PowerPoints and stuff like that, but now I'm really just starting to understand how software has been sold in the boardroom to CTOs and to all these executives at a high level, being like, oh, we can provide your company this whole suite of software and be able to provide this and that and the other. And then it's just kind of shoved down the employee's throat. Whereas with Palantir, it's really a bottoms up approach where you're able to truly sit with these forward deployed engineers and really come up with the solutions with them. And I think that that's what they mean by leveraging. They mean, hey, you guys are the ones that understand how this new wave of technology and data flows work. Let us utilize what you know. We'll bring to the table what we know about X, Y, and Z industry. Let's collaborate. Let's partner up and figure out the best way to create a nuts and bolts system and software that and applications that are meaningful. And so that really struck home for me. And the whole thing on its own, just the passion that I hear from Karp and the ability that they have to just continually reach out across and continue to form relationships is something that I'm really trying to keep an eye on. And I also hear the frustration that they have. And Amir, pointed this out very bluntly with his graphic, where there's basically non-existent non-US commercial growth. You can hear that in the voices of the executives at Palantir, how much they're praising US commercial growth and how they think that can 10x, which gives some clarity, by the way, because I assumed they meant all revenue 10xing. And now if you're focusing, it's US commercial 10xing. So that gives a little bit helpful with the clarity there. But, still there's this stagnant piece of business that unfortunately is showing up, and it's still meaningful, 600 or so million dollars a year in revenue that shows up, but unfortunately is not growing. And so what can we do? What can we do to inspire from the US standpoint, or just Palantir in general, as shareholders or as the people of the company can do to inspire the people of Europe to be like, hey, these guys are actually here to help, not to hurt or anything like that. It's very interesting. I'm not really fully comprehending that. So I know it's a whole bunch of different, um, different pieces in there, but continued love for the company, and um, really interesting to see where they go forward. I did hear the buyback piece. I'm still waiting on some minute details. So it looked like they bought back about 200,000 shares or so. So they're about 2.5 million cumulative shares at this point. So about 18 or so $1 million worth of buybacks, which ends up being about 5 or 6% of cash flow. So there was that piece. What else was there? Yeah, other than that, I think that's relatively it.
Sorry. I just want to add that they made some pretty interesting comments that's been on everyone's mind, ever since this AI revolution began. There have been a lot of AI doomers, like, okay, is AI gonna steal everyone's job? But I mean, they were pretty clear. And if there's one company that is credible in, like, okay, how will AI empower, the workforces out there? They're like, no, like AI is empowering factory workers and other like blue collar workers. Like AI is not here to take their jobs. Like, and it's not only for data scientists. Not only data scientists will prosper. Like, we're giving blue collar workers superpowers. So I'm interested to see if there is going to be some headlines about that, moving forwards, because there's been a lot of commentary, a lot of AI dooming around, but Palantir is saying like, no, this is gonna empower the workforce and make you a lot more efficient. And Yeah, sorry, Arnie, go ahead before we discuss some other details. I just wanted to throw that out there. I know you've been waiting.
I would reiterate a bit exactly what you mentioned, that I think was very, very important when it relates to the Salesforce. Palantir experimented having a Salesforce, if you remember, right after the DPO. They were saying, oh, now we are hiring the salespeople and so on. It seems they realized, okay, we just need to bet on the strength of our product. We will have like very, very minor sales force just to help contractualize stuff. But what truly matters is we unlock value, we build the reputation, and the credibility that we get with our customers is what will help us grow. Simple word of mouth, because when you want to deploy millions into projects, it is obvious that you make a couple of calls with people you know, people that have touched the product, and you get some feedback. And when people want to use that product, when people are happy to encourage the use of that product, then you start having a lot of growth in terms of people want to sign. But guess what? When this happens at scales, you start unlocking something beautiful called the network effects, which is exactly what Karp was mentioning. This credibility helps growing even more the reputation, growing much more the ability for Palantir to just break into a customer relatively fast and being the first call. And the more customers Palantir can have, the more value it can unlock, the more growth they can achieve. And guess what? Even if they didn't explicitly said, this is exactly the secret sauce that is allowing Palantir to unlock the black magic of expanding growth while expanding margins. It's all about this. And I'm happy that we noticed very early on that Palantir is not just an enterprise software that sells a software. It's effectively an enterprise network. Someone is muted.
Sorry. Too excited today. Got muted twice. Now, dude, I have a lot to say. I tomorrow morning I'll probably get more thoughts, but yeah, man, it's just wild, you know, when you see something that is very small grow to become something that is very big, and obviously financially it has changed all of our lives, but also emotionally. I mean, Arnie was at my house a year ago. I think I'll be meeting Arnie soon again in New York soon, and Amir. And so the idea that I have friends from Italy and Sweden that I can, you know, physically see and say hello to because of this company, because of our mutual interest in this company, it's insane. And so I'll be seeing Matt in a couple weeks in Miami. Like, it's just the relationships I've built because of Karp's leadership and the company's execution is something I'm unbelievably grateful for. And then when you see the execution of that actually live up and blow past the expectations that all of us have, that the entire world had, because no one thought Palantir could do what they did at the speed at which they're doing it, but they're doing it. The biggest question now is, how big can this become? And I think that's a mystery for all of us to find out over the next decade, but it's just incredible to be on the journey with everyone trying to see how this plays out.
I mean, we also got some very interesting comments, you know, been talking about AI FDs and stuff, how that's going to accelerate the business. But I mean, it was pretty expansive what these AI FDs can do. I mean, they mentioned like they work autonomously, executing across, you know, they are creating and editing ontologies for customers. We've been hearing about like how difficult that can be for some customers. They need a lot of help with that. Debugging, building apps autonomously, you know, reporting back to humans when necessary. Like it seems really, really sophisticated. And that seems to be like the way moving forward. Like they don't have to send people out anymore to the front lines. So when they have, you know, AI with these kind of capabilities. And we also got you know, Karp with the cheeky comment when he mentioned what he tells corporate leaders, like, if you want the right to have an opinion, to be able to say whatever you want in public, like I do, you better start getting numbers like ours or stay quiet.
Can we double down on that for a second? Because he's right. The ability to say whatever the hell you want and to have your opinion matters requires business results. Elon gets away with anything because he's Elon and he's built Tesla and people believe in Tesla and he's got the results to show for it over the long term. I know the earnings have been bad for the past couple of quarters, but since inception, he's dramatically outperformed the entire market. Palantir gets the right to make their opinion matter in the marketplace of ideas if they're actually delivering value. And I think this is what he said at AAPCon a couple months ago. He's on this kind of new riff, right? Karp gets these new motifs and riffs every other quarter. He has these new ideas that he starts kind of permeating out as he speaks publicly at keynotes and podcasts. And I think the new thing that he's really trying to get people to understand is that if we can make our unit economics, which are over 60% in pretty much every category, your unit economics, you don't have to be Palantir, but if you can be like Palantir, you're going to win. And that's a very attractive sales pitch to everybody. Arnie, or go ahead, Amir, go ahead.
No, I was gonna say you asked earlier, like as we dig deeper into the numbers, perhaps we will find some negative stuff. I've been looking, I've been creating charts. I think this is pretty much like a 10 out of 10 quarter. Like this is the best quarter of that I've seen. Probably I can't think of any company reporting a better quarter than this quarter. This eclipses Q4, and we were all like shocked by Q4 of 2024. Like SPC is down to 15.9% as a percentage of revenues. People have been complaining about SPC. The industry average in the SaaS space is like 24%. They're like at 15.9, so they're not even diluting excessively as people claim. The margins expansion, the growth dude. This is if I can score this 1 to 10, this is a 10 for me. I can't find anything, apart from international commercial, which they don't even appear to need for now. Like, can you guys think of anything negative from this quarter? Like this flawless quarter. I'm just super impressed. I don't even know what to say. You said it well, like speechless. Like, what can I say?
Yeah, I mean, Arnie, do you have any red flag? Because, a lot of people tend to say we're fanboys and stuff like that. And they weren't there in 2022 when we were criticizing the company profusely because of their inability to sell. It's just they haven't seen massive criticisms from us over the past year because they've executed. And so when you get a quarter like this and you want to bring up a red flag for the hell of bringing up a red flag, well, if there are no red flags, it's hard to create an artificial critique.
Maybe the red flag is literally the absence of any real red flag. I'm Alina. I like to be critical of stuff. I don't really see any particular issue. We already discussed about the international side. Karp is aware. He mentioned that he is targeting targeted opportunity, especially in Asia. He didn't really mention Europe, so it means he likes some perspectives there. I think he was referring also to Japan, South Korea. Like we've seen some good stuff happening also, especially in the chip manufacturing side, but also Sham mentioned. And I would say what goes through my mind is, let's say you are an asset manager right now. You bought some Palantir because you wanted to be exposed to the AI trend. What would you do? Like, is there any reason to sell?
It's a good question. It's a good question because a lot of people in the chat are probably struggling with this as well, and I would love for people to answer. But I mean, yeah, obviously everyone's personal financial situation is different, but given this type of a quarter, same thing, that you see with companies that put up really good results, do you sell just because the valuation's up there, even if the results are phenomenal?
Yeah, that is kind of interesting as a point. The only red flag is that the quarter was too good because, okay, historically for Palantir, analysts have not gotten Palantir. They always below, Palantir always beats, always over delivers. Analysts have been pretty shit at forecasting. Is this the quarter that this turns around? They're like, no. I mean, 10x the revenues in 5 years, up the expectations. Is that could be the only thing that could really stop the momentum in the stock? Is if analysts are like, dude, we don't get it, but they seem to be steamrolling. So let's just up the expectations to something completely unreasonable. That is like the only thing that I can see as like stopping the momentum. Like if analysts just go like all out, like no, just triple our expectations for next quarter, like something ridiculous like that. But aside from that, I mean, please, as Arnie mentioned, we love to be critical. I've been called like the biggest Palantir bear on like every weekly for like years. Please write to me on X. My DMs are open, or just tweet openly all the red flags you have, and let's discuss them if you can find anything. Like for now, the 10Q is not out. Typically takes 1-2 weeks, but for now, like open, like I can't see anything. I'm like, dude.
Look, there was an interesting comment about a red flag being potentially the big use of adjusted metrics, which is a fair critic to Rise. But I would address that immediately. It's true that adjusted metrics are typically worth investigating because there are some bad companies making a lot of adjustments to just make stuff look much better than they are. And that was also something that at the beginning scared me a little bit because I was not really used with all of these adjustments. And that's why it was very important to understand what is an adjustment. For instance, when we're talking about adjusted operating income, the adjustment is mainly referred to the SBC. So that adjusted operating income is essentially a proxy to the free cash flow. But once you understand that, you realize, okay, I need to be aware that this is close to the free cash flow more than the earnings. If I want to get closer to the earnings, I need to incorporate the effect of the SBC. And then you investigate the effect of the SBC, and you try to understand, okay, but is there an issue? Is something structural that breaks the business? Or is something that over time with scale gradually gets lower and lower impact, and the gap metrics actually emerge? This is the case. So as we were saying before, right now, the SBC impact is getting lower and lower. When we first started studying the company, the SBC was frankly very high, almost insane compared with the level of the size of the business. And now, since the company scaling, is actually getting lower and lower, but lower to a point where even the best run companies are actually struggling to make this percentage impact going lower. Right now, we are talking of a company that has almost around 50% free cash flow margin, but net of the SBC income, so net of SBC impact, we are still talking about 30 plus net profit margin on GAAP basis. So even including this bad SBC, this like what is typically adjusted, we're talking about tier 1 numbers. This while also growing, which is what makes stuff quite scary, because typically companies that have very high net profit margin, they achieve that just growing in line with the market and just capitalizing on their brand power, but they're quite restricted into their growth opportunities. And Palantir is having insane margins while expanding.
Real quick before Amir goes, I also just want to say the stock. So it's at 166 all-time highs. Maybe it goes back to 160. Maybe it goes to 170. I think the fact that we are holding the price that we are at today, we are above the price that we've been at for the past couple of weeks, which was around 155, is a win. Because if everyone in the world is saying the valuation is egregious, it's crazy, then you would expect a crappy earnings to take down the valuation. This earnings, I think objectively we can say, is not crappy. It's given us a little bit of a boost, but the fact that we are holding it, the price, and it's not, going back to 30 theoretically, maybe it could, but seems unlikely, is a win. So although this is not like August of 2024, where the stock went from 20 to 30 after hours, that was a different Palantir. Going from 158 to 165 to me is a very big win, and holding that multiple is very important as well.
Mm-hmm. I have a question for you. If you have to summarize in a headline, as if you were a newspaper, what happened during the quarter, like how would you break the news of a quarter?
Amir, you can answer that, and then you can get into the slide as well.
Oh, dude, I don't know. I can't even think up of YouTube titles, so don't ask me to make some just
practice
red lines, dude. No, dude. Let me be honest. If I could print out something and hang it up, it would be that Karp to CNBC quote, dude. What do you say? Read them and weep, dude. That would be my headline. To the haters, read them and weep. I don't know. I don't know a good one. Give us yours, Arnie, because obviously since you asked the questions, you should be able to answer what your headline would be.
Enjoy the tears.
The clickbait. Enjoy the tears. Yeah, dude, this one. Man,
All right, Amir, go ahead. You can get into this.
Yeah, no, okay. So I just wanted to address some of the common bear things. So one thing that we've been hearing for a long time now, which this quarter dispels completely, is that once the 10-year treasury yield goes down and the Palantir loses out on this interest income, the earnings are gonna look horrible, dude. Yeah, how horrible are they? Look at this black line here is interest income. The golden one is net income excluding interest income. Look at this quarter. I mean, does Palantir seem reliant on interest income any longer? No. As Arnie mentioned, the operating margins are just expanding so beautifully, now up to 27%, closing in on that 30%. And keep in mind, Palantir is just so capital light. Like, there's basically no capex. That this is kind of a proxy directly to free cash flow. It just keeps expanding, and with the talks of AI FTEs, I mean, seeing that 60% free cash flow margin constant is not even gonna be out of the realm of possibility in a few quarters even. And I just wanted to show the SPC chart. Of course, we had the Q4 SARS impact, whatever. Aside from that, it's down to 15.9%. I mean, the SPC is just, decreasing, and it will keep on decreasing, especially when they're talking about, reducing their workforce as they expect to grow, increasingly faster. I mean, net cash, they have no debt still. I mean, what is there to be negative about when it comes to Palantir? I'm gonna, as always, make a complete review, look at it when the 10Q is out, be a bit more critical, but just on face value, for now I can't really see anything. Most common bear arguments are being dismantled in real time the last couple of quarters, that I don't even know what to say anymore. Like
I agree.
Of course, the only red flag for some people and most people is the stock quote. That's the only
the price being too. Yeah, and anything can happen to the price. I mean, we know anything could happen. Like tomorrow it could open and gap up to 170 or gap back down to 155. Like anything can happen with the price. So this was a call, and I talked about it last night on the show. I did not care about the stock. And I think all of you guys agree. Like, this was not a call or an earnings for the stock. This was an earnings to see, can Palantir live up to the pressure of the moment? And I think they blew away our expectations. And eventually the stock price will follow as a byproduct of how the market decides to value it. All right, folks. Any departing thoughts? Matt, Arnie, Amir? Speechless.
We're doing it.
Okay. I don't know. You guys aren't hype enough for this quarter. Like, are we?
Dude, I think legit all of us are speechless. Like, honestly, when we saw $1 billion, we all thought it could happen. None of us thought it was like a 0% probability, but then it happened, And so
I think I'm just trying to understand. I mean,
give it to us, Matt.
I'm trying to understand how the margin expansions are working so seamlessly, and the revenue growth is working so seamlessly. Like, I mean, literally 24 to 36 months ago, when the price was in the shitter, I mean, we were all optimistic that this would come, and now it's here, and it's like, can it? I guess I'm just sitting here like, can it actually continue to be this good? Like, is this peak Palantir? Or is this like legitimately what we're going to see? Are they going to be able to continue this greatness we've kind of observed them create over the past year, 12 months, past 4 quarters, as they've really like shown how well they've been able to turn the ship around since 2022, 2023, in terms of like growth rates and everything that everyone was kind of saying, hey, all the trends were going, as we all know, were going to the in the wrong direction, except for say cash flow margin, right? That was always continuing to go up in the right way, but like revenue growth and net dollar retention and all that was all trending downward. And over the past 24 to 36 months, it's really been on a wild ride, and more so over the past 12 months. It's like we saw what 38% last quarter in revenue growth. It's what 48% this quarter. It's like, can it really continue to like? I'm just like in awe. Like I don't even know what to really think. Is it actually going to grow above 50? I mean, if you think about it, the U.S. commercial was over 80%. They expect that to 10x on its own. I mean, it's it's
Real, dude.
insane. It's insane.
But that's the thing why the stock price is the way it is, because no one really knows what to expect of Palantir. Of course, you have the traditionalists who are like, dude, this makes no sense at all. And then you have quarters like this where they just blow you out of the water, and it's still after, as you mentioned, even after today, you're like, dude, what can they actually accomplish? Like, what can the future look like? And there's just so much unpredictability, so many unknowns. And that's why I believe that the stock price is trading the way it is. Like there's just no similar company on the market. Like the only comparable thing I can think of is like Elon saying that, yeah, Tesla Optimus is going to be 20 trillion in a couple of years. Like that's the only, like, dude, like, but Palantir aren't even promising that. They're delivering now. Like Elon's promise is like way into the future. Like, trust me, bro, we're gonna get there. But he's not showing anything today. Palantir is the opposite. They're showing you amazing numbers today, but they're like, dude, the future is gonna be even more amazing. So the stock quote is the way it is because there's just so many unknowns, and that's why when people ask me, dude, you say that fair intrinsic value is $75. Why don't you sell all your shares? It's trading at 150, 160. I'm like, dude, because I admit to myself that I do not understand enough about this company to value it like remotely accurately, because this company, every quarter that passes, I just raise my intrinsic value like exponentially because I just learn so much for each passing quarter. Like I might not buy at 170. I still want to buy like what appears to be fairly valued to me. And luckily, back in April, it was trading, at 65. I bought more, but those opportunities are rare. But still, like, I don't want to sell a single share because this company, like, I don't even know what to expect from it into the future. And I think a lot of people are in that same boat. They're like, how good can this really become? And
I think
it's magical.
It's very similar to what Matt has said constantly about Rocket Lab, right? Why does Rocket Lab get 40 times price to sales? Because space and the TAM of space is unquantifiable. And Rocket Lab's one of like 3 companies that are publicly traded that are executing on this crazy TAM. And so a traditional model is very hard to kind of price out what they can do. And I think with Palantir, we've tried to price out because it's a SaaS company. Like, shouldn't be that hard to analyze. But it's Palantir, which is not a traditional SaaS company, which makes it very hard to analyze.
Yeah, I mean, it's a company like this that you never sell, right? I mean, when was the right time to sell Microsoft? And the answer was never. When's the right time to sell? The answer is never. And it's going to be the same thing with Palantir. Like I always view it as potentially being $1 trillion company. When we talk about valuation, it's always in the eye of the beholder, right? Like, do you want to buy because you think it's going to be a $2 trillion company in the next 20, 30 years, or because you think it's going to go up 2x within the next 2 years, right? Like everybody it's not binary. It's not 1 and 0 in the stock market. And everybody's doing everything between holding something between 10 seconds and 10 decades, right? So it's hard to be able to talk about it in a very succinct manner on on social media and on YouTube, because everyone's going to have their own opinions, right? We have people on here that are showing up and are only going to be utilizing Palantir as a momentum trade, between now and next quarter. And you have people on here that are hopefully going to be handing shares down to their grandchildren and their children's children. So it's going to be interesting because overall, I always recognized, when it DPO'd, it'd be over a $250 billion company. And I've learned so much, just like you said, Amir, since that time that I've raised that to over $1 trillion. And it's like, until it kind of gets to that point, it doesn't make sense. Now, the point where I'm going to get flabbergasted is this, like, unless I see something drastically different from what I see today, and say the valuation gets to $1 trillion, trillion and a half, I'm going to be kind of scratching my head to be like, what the hell? But at the same time, it's because at that point you're getting to the valuation of, say, a Google or an Amazon, right? I mean, yes, they're still 40%, 50% cheaper than those companies, but those companies are churning out $100 billion in net income per annum, right? We're talking about a company right now on a trailing basis that's at 7% of that. So 7%? No, 0.7% of that, right? So it doesn't make sense why it would potentially be worth, almost half of a Google, if it were to get to $1.5 trillion, and it's only, making $750 million in net income. So I don't know. At some point, it messes with my head a little bit, and sometimes, maybe I'm trying to be smarter, trying to think that I'm smarter than I am, and I just need to shut up and just hold the stock.
Look, there is something very interesting that you mentioned before about Rocket Lab essentially facing a very big TAM, but if you look around, hey, there are not many players. We know that the AI market is not big, but is insanely big because it touches virtually any use case in any vertical. And we were hearing about research about AI being a $1 trillion opportunity on its own. So, and you look around, apart from the cloud providers that provide the raw compute to do something with AI, what are the companies that actually help create the use cases that unlock value? Like if you have the fuel, but you don't have the engine, you don't go very far, right? And Palantir is that engine to digest that fuel, to produce some movement, to produce the output. And if we look around for real, there are no other valuable solutions after 2 years AAP has been launched. There was a lot of time to provide an alternative answer. We were scared at the beginning, maybe, oh, Microsoft Fabric. I don't see any reference of how Microsoft Fabric is successfully unlocking insane value in any big organization, be that a public or be that a private institution. So this is a first reflection. More specific to the stock, I think is interesting that now the stock is moving up a little bit. Okay, fine. What I think is inevitable is all the analysts need to increase their price targets. Like there is no way that when you raise the guidance from in the 30s to 45% guidance for the year, incorporating expectations of, okay, this push, this acceleration may continue for a long time and quite violently, your free cash flow model needs to be updated. So I expect a lot of voices from the analyst community, and there is a very big push toward, like there is a big need from all the analysts that are not still covering the company to actually have an opinion on it. Remember, we were mentioning last time at Weekly, for a company like Snowflake, there are around 40, 50 analysts. For Palantir, there is less than half that number. Imagine how many banks still don't have an opinion. And all those opinions matter so that institutional investors can make their own judgments. And the final thought is about existing shareholders versus against shareholders and versus potential shareholders. What do you do when you see so strong results? My personal feeling is if you're already an holder, you are happy and you don't really have any reason to sell. because yes, valuation is expensive, but hell, like this evaluation is backed by the strongest results that we could ever imagined. So personally, I don't think and I don't see any reason to sell. Prospective buyers must be scratching their head right now, because it's ages that everybody's looking for the dip. When the dip happens, there is always a reason not to buy. And I'll wait for Palantir to dip because it's expensive and will fail on the earnings to buy the shares. And this moment almost never arrives. So if it arrives, it's just a couple of days, and then there is enough demand. The issue is for past owners that maybe they sold in a moment where the valuation seemed expensive, but in reality, the business was firing so much, and they're still waiting on the sideline again to catch up again. And for them, it's probably a similar issue to the prospective buyers. So overall, I see a lot of pressure to buy because people are craving to have these shares. But on the other side, as again, I don't really see why someone who has a big position would be incentivized to sell.
I agree. Hard to sell, but also, hard to buy if it's not giving you your dip. August was really that last dip. Not August, April. You had a little bit of a dip with the Russell rebounds, but it's going to be one of those companies that's going to be expensive forever. And then imagine what happens tomorrow if it does go to 140. Let's just say for whatever reason goes to 140. The amount of people that would be like, holy crap, 165 to 140. This is my dip. Even though 140 to everyone who's so strung up around valuation is not that different from 160. Both of them are still pretty damn expensive for Palantir, even with this growth. It's one of those things where Palantir had, I'll give you guys the exact number right here, today, 1,042,960 contracts that were traded in the options market. The three companies ahead of them, NVIDIA, Tesla, Apple. Multi-trillion-dollar companies, Palantir at $350 billion, is the fourth most traded stock, fourth most liquid stock in the options market. Like, it is becoming one of those names where everyone cares. So if you get a 10% dip, you will have buyers. If you get a 20% dip, you will have buyers. But if you get a 27% rip, you will also have a lot of sellers. And so it's very hard to kind of time how you want to buy and sell it. But if you're in this for the next 10 years and you believe in Karp and the long-term vision, then buying and holding over the next decade hopefully is the right strategy.
But that's a great question. I believe many viewers are in that situation where they follow your content, Arnie on X, Matt's content, my content, and they're like, okay, I'm starting to get Palantir. I understand this is a magical company, but I don't have any shares. When should I be buying shares? And to be honest, I don't even know, dude. If I didn't have any shares, I don't even know what I would be doing at 166.19 now. Like, what would you guys be doing right now? If you didn't own any shares in Palantir, but you know everything you know about Palantir, what would you be doing? Because I think this is the dilemma that many people are facing.
My answer is actually really simple. I would buy shares and sell out of the money covered calls to reduce my cost basis. So at least you get the exposure, but you also get the premium to get more money income to then buy more shares and build out a position. That's how I would think about it. And if you don't want it to be that complicated, you would just buy shares and DCA. That's it. That's all you can do, right? There's not much to it unless you're waiting for some magical dip, which might happen. But if it doesn't, then you can't do anything.
Yeah, everyone's saying DCA in the chat. Yeah, okay.
I mean, I have short puts in the 80s. So if it does dip into the 80s, I would let those expire in the money.
Yep.
But for now, I'm just, and those have just been rolling right up and to the right. I mean, they started at the 40s. Like, I was just like, hey, like when this thing ran from the 40s to the 60s, I didn't really have a large short position, like short put position, meaning, and I wasn't trying to like get a lot of additional shares. But the more this thing kept running and running and running, it was just like, okay, well, if it does actually decide to dip down, and it started at the 40s and then I jumped into the 50s and now it's rolled all the way up to the 80s, and it's been a nice little profit maker for me. But will I actually get any? Probably not. But yeah, I mean, whatever I do, sometimes I'll trickle a few dollars here and there. It's been a couple months since I bought some shares, but every once in a while I'll buy a share or two. But I mean, I don't know. It's tough. I understand where people are coming from, and me, like I said, I still can't wrap my head around buying so many years ahead, right? I mean, I look at Google, it makes sense to me. I can buy Google at a 20x earnings, 2-3 years from now, right? That I can conceive, that I can wrap my head around, that I can. But like a Palantir, if you start looking at it, I mean, Amir, your spreadsheet's better than anybody's here. The 2030s is probably when you're starting to say, okay, these numbers start to look somewhat reasonable. It's like, is that okay? Like, am I going to wait unless there's some sort of massive growth number that I'm missing, which maybe the growth number that we got today, 10x in US commercial, maybe if we input that in, maybe it'll make a little bit more sense, right? Because that means what is it? I think it was 1.3 billion in terms of fiscal year 2025. That means in 5 years' time, they expect that to be $13 billion. And if they're getting a 50-60% margin from that, then shit. I mean, just alone from the U.S. business, you're talking about $7-8 billion worth of ops cash. I mean, that's not far from impressive, right? I mean, that's massively impressive in my opinion. So, but is it worth paying $400 billion market cap today? I would say that's tough. I don't know.
Incredible stuff, guys. Incredible stuff. I will let all of you go. I'm just going to take 5 minutes right after and just finish up these super chats. But Arnie, Amir, and Matt, all of their stuff is in the description. I'm linking their Twitters and YouTubes in the chat. Please make sure to follow everybody. We will have a lot more to talk about on Palantir Weekly this Friday, going deeper into the numbers. But yeah, this was a good one.
Thanks for having me on. It was a lot of fun.
This was bombastic.
Yeah. Thank you, Amit. Thank you to every viewer for sharing this magical moment with us. Sorry we were kind of speechless. I'm sure you guys were at home too. Amazing. Yeah. Palantir Weekly on Saturday. Read them and weep. Digest until Sunday. Saturday, Friday, whatever, whenever weeklies.
Karp is a gangster, bro. Thanks for having us on, Amit.
I love it. Thank you, guys. Talk to you later.
Bye-bye.
Later. All right, folks. That was a good quarter. It was one of those quarters, but that was a good one. Moon Money, thank you for the $5 super chat. PAF. If you know PAF, you know PAF. Thank you for being here. Thank you for the super chat. Magusto, thanks for the $2. I'm gonna cry. I'm sure some people at home. I mean, I didn't let out a tear. I know I saw your guys' comments when I was looking at Karp Talk, and I was basically like the eye heart emoji. Maybe that's what I looked like. I didn't cry, but it is emotional. It is emotional, especially if you've been here for a long time. I mean, to see this play out it's quite incredible. Charles, thanks for the $10 super chat. Happy birthday to me from Alex. Charles, oh, this is your birthday? Oh, congrats. If it's your birthday, what a birthday wish that is granted from these earnings. So congrats to you, Charles, on an incredible quarter. James, thank you for the $50 super chat. Appreciate it. Thank you for being part of the channel. Thank you for the 50. Dolores. Alex Rodriguez, thank you for $20 as well. Palantir did hit 172.20. I saw on Webull and Legend. We did get into the 170. It was very short-lived, but we did get 172. So tomorrow when the market opens and you have real liquidity come in, I don't know. We're going to see. Right now, after hours, you barely have shares that are being traded. Tomorrow is when we get to see how the market ultimately thinks of it. Her tweet cat, thank you for the $2. Pure poetry. Well done, Palantir. Thank you for being here. Astricus, thank you for becoming a channel member. Howard, thank you for the $20 super chats. Is Palantir a buy at these prices? We just talked about it for 20 minutes. So if you missed it, you can rewind. But again, it's hard to say it's a buy. It's a little easier to say it's not a sell if you believe in the potential. It's easy to say it's a buy if you have a long-term trajectory. But if you buy it here and then it falls 20% in a month, you're going to be upset, right? For any stock, the only thing you can do is DCA or sell some puts or sell some calls and kind of use the options market to be able to offset some of the losses that could incur if the stock goes down. But buying in DCA, I think, is the only strategy for Palantir. I mean, everyone that's been waiting for that $30, $40, $50 price target. I mean, there are people on Twitter every day that I see put out their bear case and they get to $30, $40 and I'm like, look, I think you're missing a broader story. And as a result of that, sometimes you have to buy it at a more expensive level. I mean, the last shares I bought were at 134.50. And 134.50, it was like, what, 320 billion? Like, that's an expensive market cap to be paying for the types of revenue and net income Palantir is putting up, but it fell 15%. If you love a stock, it falls 15%. You tend to nibble a little bit. I nibbled a bit, and I got some shares because I don't know if those opportunities are going to come again. And I think that's kind of the way to, at least psychologically, think about it as well. Rob, thank you for the $50 super chat. Amit, I started getting into Palantir in 2023 because of you. Last year, I became a millionaire, and by this spring, I became a multi-millionaire. Wow, congratulations. Now I am at 3 million and making an extra 40,000 a month using OTM covered calls, which is out of the money. Thanks, brother. Rob, congratulations. Yeah, I mean, this is what I was talking about when we were ending out with everyone else. If you have a lot of Palantir shares, I mean, there's some of you that I know that have upwards of 50,000 shares. If you could sell a covered call every week, and for those that don't know covered calls, if you follow the channel, we talk about it a lot. I'll leave a video in the description that helps explain covered calls a little bit more. You can generate a lot of income from a very heavy Palantir share position, and it can be quite substantial. I mean, if you sold the 180 covered call for August 8th, they were paying you $3 a share, which is $300 a contract. So let's say you had 1,000 shares that you put up for sale at 180 this week, you got paid 3,000 this week. And if your cost basis is anywhere significantly below 180, even if they get called away, which if they do get to that level, you can obviously roll it and manage the position, but it's obviously not a bad strategy to be able to generate income. So a very heavy Palantir position can make a lot of people a lot of money in the options market just by using covered calls, which is the benefit of having a ton of shares. Now, granted, Palantir has been one of those stocks where if you have covered calls on it over the past year, it's really just not worked. So you really got to go out of the money, instead of doing 170, do 185 or 190, right? Really give yourself some space. But the premiums are so incredible. And that's why the options market, Palantir trading 1 million contracts a day, it is becoming a household name in the stock market. And you have a lot of liquidity and people that actually care about trading it, which is why you have momentum to the downside and to the upside, because there's so many people that care about the name. Batty, thank you for the $200 super chat. Incredible execution. Congratulations to all Palantir holders and those who held in the trenches. We will see 200 in a month. Batty, thank you for the $200 super chat. I know you've been on the journey with Palantir and Hood for me, and I think you will be at Miami. So it'll be very exciting to see you there. And, Hood and Palantir both been incredibly blessed to cover those two journeys. And Palantir, I mean, Hood is having its own little bit of a Palantir moment this year, from 7 in 2023 to got to 110 at the highs. Palantir now at 160. If Robinhood can get anywhere near those levels, I would be ecstatic for them. But both companies that care about value, that care about delivering growth and doing it the right way. Ahmed, thanks for the $5. Appreciate it. And then Doge, thank you for the $5. Alex needs to be the next American Eagle spokesman. He was definitely patriotic as he was speaking. And American Eagle was up today because Trump said he likes Sydney Sweeney. So there you go. You had some momentum on American Eagle. And Diana, thank you for becoming a channel member as well. Ian, thank you for the £2. Shout out to all the dropouts that are winning. Yeah, I mean, when Karp talked about this idea of dropouts and the idea of not discriminating against you based on where you went to college or where you come from, I think he seriously means, hey, you can work at Palantir, you can be successful at Palantir, and we don't really care where you come from. We just care about, can you deliver value? And I think that's kind of the ethos and the philosophy of the business as well. Can we deliver value and then get paid appropriately against the value that we deliver? Wow, man, it was one of those quarters, dude. I mean, like it's a little speechless because it's like, what do you say when you see something like this? And we talked about it last night. I wrote on Twitter over the weekend, it would not surprise me if they get to 1 billion, but then they did it. And that's the most exciting thing about this. Again, I've said this over and over again, but I will continue preaching this message. There is a right way to build something and there's a wrong way to build something. And given I am on my own journey of building my financial content creating brand and whatever AK media, which is not even a real thing, turns into over the long term, I am very, very inspired by Palantir. Because in a nutshell, how did Palantir build their brand and build a company? They just gave value. That's it. It turns out when you give value to the marketplace reciprocates based on the level of value you give. And when you listen to Karp speak, the reason I looked like I had heart eyes is because I'm listening to a guy who 20 years ago basically gave up everything to go on a journey of a lifetime. You know, I've you know, I'm not a guy that tends to cry a lot, but I have cried before when I see people that are super successful achieve their success. So, for example, when I saw Kevin Durant, who's a NBA player, win his first MVP trophy back in 2013 on the OKC Thunder, I think it was 2014. I remember explicitly crying because of him thanking his mom and how much of the sacrifices his mom had to go through in order for Kevin Durant to become an NBA MVP. I remember, you know, I didn't watch basketball when Michael Jordan was playing, but when I was really in my basketball phase back in 2010, 2011, and I was watching Michael Jordan win his championships on YouTube, like through old videos, and I saw Jordan in the locker room crying after he won a championship. I think it was like their third championship. And he just put the towel over his head because you just have this unbelievable level of emotion. I also cried. I did see LeBron win the 2016 Cleveland championship for the first time in Cleveland's history, coming back 3-1 against the Warriors. And I remember I was actually coming back from a flight from Utah because I was at a debate tournament. And I don't know if I've ever told this story, but we had the results on the plane and the pilot said, hey, we're going to have the attendants come and if you want the results, they will pass you a napkin with the results. We're not going to say the results because it was game 7. It was such a big deal that we're not going to tell you the results because some people might want to find out on their own. But if you want a napkin with the results, we will put the score on it. And I wanted to know, did LeBron come back against the Warriors? And the attendant gave me the napkin and it said 89-93 Cavs. And I was just like, holy crap, they won. And then I came home and I saw LeBron cry because LeBron was emotional about, you know, bringing a championship to his home city. And I started crying as well. So the reason I'm saying all this is because when I'm seeing Karp get $1 billion quarter for the first time ever, when this company, you know, 5 years ago was barely doing $1 billion in revenue, it is emotional, especially when you've had the honor and privilege of covering their journey since the stock was $6, and you've been able to be one of the voices that created a community around what they could become. You only have one life, right? You only have one life. And in that one life, you know, so few people get to achieve the thing they want to achieve because of you know, life is hard, life is difficult, life is random. You have a lot of shit that happens that can derail people from achieving a goal. And then the other obvious fact, it's very hard to achieve very monumental goals. The level of work that the work ethic that you need to have. I mean, Karp was talking about employees are working around the clock for some of these clients just to be able to deliver results, to build a culture where people actually care about delivering the results and value just to make sure the company delivers. It is very rare to find those cultures. Now, that culture is not evident in a price to sales. It's just not, but it's there. Same thing with Robinhood. Robinhood's trading at a pretty aggressive multiple, 30 times price to sales. But then when I talk to the employees, when I talk to Vlad and I see his, you know, commitment to delivering value, because Vlad's a billionaire, Karp's a billionaire. They're all rich. They're not really doing this for themselves anymore. This is about, can they get their legacies established by building these companies? You really do, in my opinion, think twice about not paying a multiple for that type of leadership and commitment. And it makes you emotional, because it's not easy to set out a goal and then spend 20 years of blood, sweat, and tears and then be dragged by the media for trying to just deliver effective results and still supersede. And as Karp said, you get the privilege of saying what you want to say, of having an opinion that matters if you can deliver results. Everyone's got an opinion. Your opinion doesn't have to matter unless people think it matters. And the only way to get people to think your opinion matters is to deliver enough value and results for them to care about your opinion. And Palantir is now making everyone care about their opinion. So it's pretty incredible, dude. It's pretty incredible. Cactus Jax is like, cry watching the Chicago Bears year after year. Amit cries media. Yeah, that's what we got to call it. Amit cries media. Dude, it's exciting. It's very, 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 very exciting. There are not many times you get to see a journey like this happen. And there's not many times where everyone gets to come together around the world to take part in that journey. Steve texted me his response. I don't know if I should. I don't want to read it. Should I read it? It's a little vulgar. It's vulgar to the upside. Should I read it, guys? It is vulgar. So let me just, all right, I'm going to read it. But if you have kids around, I would just like, you know, turn it off for like a minute and a half and then get back to the stream. I'll read it, but it's a bit vulgar. I will read. It's a bit vulgar, though. That's all I'm going to say. All right. That's your warning. That's your warning. He also said that this is his first sentence. You can read this out loud. Okay, you ready? You can read this out loud. Karp took his cock out and pissed all over the Bears. So there you go. That's what. That is what Mr. Steven Fiorillo said about this quarter. That is what he had to say. So when you got a guy like Steve who thinks that about the quarter, it's a little hard to say this is not that good of a quarter. It's a little hard. So, dude, it's incredible. It is incredible. It is journey of a lifetime. It's journey of a lifetime. Yeah, fentanyl laced urine. That's what Steve should have said. It's fentanyl laced pee. That's what it was. It was, for those that didn't get that, Karp made a statement about fentanyl laced urine dropping over the analyst because of how much the analyst tried to screw him. And, results tend to speak volumes versus academic theory. And a lot of Palantir coverage in the mainstream media has been academic. It's been very not rooted in the reality of what they're actually doing. Like, I would view Palantir through a domination lens. Their new tagline is software that dominates. That's the lens you need to be able to view Palantir, to be able to view a company that truly does not fit in whatever box you want to categorize them as a software company, because they're not a normal software company. And all the numbers that we're going to dive into over the next coming days have proved they're not a normal software company. Now, the biggest question is how long can they sustain this tremendous growth? And if you believe in the AI future, you believe in the fact they have 800 customers, that's nothing. This company will have 8,000 customers one day. The ability for them to scale seems like very possible. And that's what makes it so exciting to be a shareholder and, continue to cover the journey as well. It's exciting stuff. It is very, very, very exciting stuff. Congratulations to everybody. It's a big day. A lot of you guys have messaged me, not only with your personal Palantir position, but you have told me that you got a lot of friends and family into Palantir back when it was under $20. And those friends and family, I would imagine, are very grateful to be on the journey with you guys. And, we all did it together. And you could tell Karp's message to retail at the end was very genuine. I've had the privilege of meeting Karp about 4 or 5 times, and I can say honestly, he's one of the most authentic people I know. He is not different from the way you see him on that earnings call. He is energetic and upbeat, and he's. I mean, like last time I met him, I think this was back in March. It was at AIPCon. He was asking me questions. He said, "Hey, I have a couple questions for you." He was inquiring my opinion on the world. You talk about someone who's humble. I know he doesn't seem like he's humble, but you get the right to not be that humble when you deliver the right results. But humility is, I think, what breeds Alex Karp as a human being more so than just the CEO, because you have to be humble enough to care about other people's opinions and to inquire about what they think about the world, much less what your customers might think about the world, before you get the results that allow you to not be humble. And I think he's a generational CEO, a generational leader. This is his opportunity. This is his moment. Everyone at the team crushed it. And it looks like they're not slowing down. It looks like they're not slowing down. All right. That is it. Thank you, everybody, for being here. Tove, thank you for the $100 super chat. Means a lot. Thank you, Amit. Keep up the great work to the moon. Thank you again for that. Absolutely means the world. And again, the final way I'll end out this, I haven't looked at any of the earnings, by the way. I don't know how any of the other companies did. I've been hyper-focused on Palantir. I will look at all that tonight. We'll talk about it in the morning for the market open. I literally have not looked at, I don't even know what the other companies are doing, guys. Honestly, I have no idea if other stocks are up or down, what numbers they put, did they beat, did they raise? So we'll talk more about that tomorrow. Miami meetup, I will put the form right here in the chat. If you want to show up to Miami, you have to sign up on this form. I will send you an email with other instructions. And then if you are free August 23rd, you can visit us in Miami as we're doing a meetup for the channel. And we have another stream later. Yes, 9:30 Tech Bros. I do a podcast with Tanner and Roy. I'm sure we'll talk about Palantir for a little bit there. We will obviously recap Robinhood earnings because that's what the podcast is mainly about. And we'll probably talk about some other tech topics that we have. So that will happen at 9:30. The way I will end the stream is by saying this. This was the point I was originally trying to make before I went on a tangent. Palantir built the business the right way by giving value unconditionally. And that is what I'm trying to do as a content creator. Give value unconditionally. I don't know what this is going to turn into. I don't know what the next decade roadmap looks like for me as a human being or whatever brand I'm building. But I know that when you keep giving value, good things happen. Unconditionally giving that type of value. And I just cannot I cannot understate how grateful I am that people show up every day, that they continue to watch the content, that they feel compelled to sell a $200 super chat, which is a lot of money just because of the value they get from this show and this content. And I'm not perfect. I make mistakes. I have my own opinions. Sometimes people agree and disagree with me, but at its core, one thing I can guarantee is you're going to get the authentic commit. I'm not sponsored. I don't have any big brands. I've been offered many times to take money for this and that, but I know it compromises the integrity of what this channel is built on, which is me trying to accurately figure out what's going on in the world when it comes to the stock market and then communicate that to the rest of you guys. And I'm taking the Palantir approach and Palantir philosophy to building a business. And so far it is working really well. And I want to continue using that approach over the next decade to keep building this. So thank you, everybody, for being here. Means the world. Siege, thank you for the $20 super chat. Thank you all so much. Enjoy it. If some of you guys are international, go get some sleep. But if you have some time to go get a drink, I mean, this is one of those quarters you get a drink. Regardless of what happens to the stock over the coming weeks, this is one of those quarters where you go get a damn drink. Because if you invested in this company a long time ago, then you deserve it. Thank you, everybody. Appreciate it. I will see you guys later tonight and then tomorrow on the market open. Bye, everybody. Have a good one.